Hello everyone, welcome to the live stream. It's James here. I'm pleased to see you. We're still waiting for one more coach, but we'll get going in the meantime. I'm not in my normal location, so I hope everything's fine in terms of sound and picture quality. It's lovely to see you all. And today I'm going to be talking about gold and, let me just find my settings here, crude oil. So let's have a look. Let's go across to some of these charts. I've got the gold chart on here at the bottom left-hand side. This is the day chart. So what I'm going to do, that's Ethereum, sorry. What I'm going to do about the day chart setups, the way things look. This is gold. We'll talk about the overall plan. I also want to talk about what's going on the commitment of traders report over at barchart.com. And there's some really interesting revelations there, which you might be interested in. And then we'll go on to talk about WTI oil and Brent crude oil. And we'll talk about my positions. And we'll also look at the COT report for these two as well, Brent crude and WTI, because they're also quite interesting and gives a little bit of indication as to where we might be going on these charts going forward. So let me just quickly check. I think that no one else is here right now, so let's just leap in. So let's start with gold, and let's get the gold chart up. And here it is. So we have a day chart on gold. You can see I've got a Fibonacci retracement study built in or drawn in here from this last swing low, sort of a flat bottom, not really a swing low. We could draw one from there as well. In fact, I'm going to get rid of this one. It's a bit long term and just put in a Fibonacci study. But there's my sort of projection for gold, but we'll come to that later. And I would put a Fibonacci in from the top to the bottom, or the bottom to the top rather. But I'm going to get rid of this Fibonacci study first and go across to back where we are. All right, so basically we've got a swing low over here. Now, when you put Fibonacci's in, all we want to do with the Fibonacci study is to determine where this price might retrace to if it pulls back in an uptrend, because we are clearly in an uptrend and we want to see the price moving up after a retracement. And I want to find out where these retracements could move to. And I've got an idea, as you can see, drawn in by this red line. But a good idea is to put a Fibonacci study in from the bottom to the top. And the most recent low was here, sort of longer term low. That's going back to November last year. So let's draw a fib in from there. Wrong tool. I think I hear another visitor. I think that might be Igor. Is that correct?
No, it's Richard.
Oh, Richard, hello, Richard. I can't see you when I'm looking at my charts, but let me just finish off. But it's nice to see you, Richard. So we'll put a Fibonacci in from the bottom here up to the top, this last swing low. And you can see that the 38% retracement levels here at around about 2,860. That's a first good target. It's also where there's an order block here. Notice that there's a trend line, but we'll come to that broader analysis shortly. There's also another swing from over here going back to March, February, beginning of, well, yeah, end of February. I think the last day of February, actually, and then moving up to where we have been. So we'll draw a fib in from that level as well for a shorter term retracement possibility. What you can see straight away is that the short term Fibonacci has some overlaps with the longer term one, particularly down in this sort of region over here, where the 38% of the longer term fib is down here at 2860, and then the 78.6% fib of the shorter term swing is at about 2880. So in that region there where I've got the red line sort of bouncing for the first time is a potential target. Now, what we have to decide is whether this market's going to retrace first or move up, whether we're potentially overbought, whether there are people interested in selling this market at this height, and what the positioning is of some of the futures traders, particularly the commercials, the producers, the managed money, hedge funds, that sort of thing. And also we could see what the retail traders are doing, people like you and me. So before I carry on with the charts, what I'm going to do is go to the COT report for gold. And I'm going to have to switch across here. So just bear with me. And stop this screen and change it to I think this is it. Yeah. All right. So this is the COT report for gold, and you can get this easily for yourself for free. It's on barchart.com. That's the website address, barchart.com. And what you get on this report is of traders positions, and you also get the average price, current price compared to the seasonal average. You can see how far we are above the seasonal average. Of course, we've had a move up in gold, so we're trading at a completely different level now, above $3,000. This time a while back, we were only at $1,800. That's the average over the last number of years, 5 years, I think it is. And then let's have a look at what the commitment of traders are doing. This is really important. Now, what we've got is a table here with commercial positions, long and short. How many we've got long? 91 long, 376,000 short. Producers, that's an important one because these are people that are sort of looking in that direction. The direction that they tend to be in is the direction that the market tends to move in over a period of time. Same with the producers. We've got 23,000 long, 88,000 short. So also weighted to the short side by a factor of 4 to 1. And here we've also got about 4 to 1. So much more to the short side on both commercial and producers. Managed money, on the other hand, long, 220,000 contracts compared to short, only 37,000. So there's a disparity there. Perhaps some of the commercials and the producers are hedging and that these are not actual real directional positions. Excuse me, but I think that's more unlikely. I think we're actually seeing quite a lot of selling. And if you look at the additions to the short side, commercials added so much more to the short side than the long side. Same with producers, 6,000 more positions to the long side as of the 18th of March. So this is about a week ago, and 220,000 to the long side. Producers 23 to the long side, and taking off some of those long positions. Managed money just the other way around, and I don't really know why, but I do think it's because we're at these extreme levels, blue sky territory. We've got nothing really above us to work with, so there's going to be a lot of jostling, moving around, double bluffing, second guessing, dark pool orders, options, hedging, all sorts of things going on right now at these extreme levels. Let's go across to non-commercials. These would probably be like mostly hedge funds and institutions. And you can see much more to the long side as well compared to the short side, and also adding more to the long side than the short side. So we've got a big discrepancy between producers and commercials who are leaning heavily to the short side. And that could be due, we've lost our screen. And that could be just really due to hedging at these very high levels. That's a strong possibility. Whereas managed money, and non-commercials, all in the same boat, very much to the long side. And then look at the swap dealers. The swap dealers are, I don't know why my charts are jumping around. The swap dealers are generally hedgers, and we have 16,000 to the long side, 237 to the short side. So a lot of hedging going on at these high levels as well. And other reportables, that's you and me, the retail traders, 100,000, quite a big chunk to the long side, almost half of what the managed money's got onto the long side. So a lot of positions there, 100,000 to the long side and 26,000 to the short side, and adding more to the long side. So the actual traders, the managed money and the retail traders like you and me, are all angling, leaning, and committing more and more to the long side, whereas the commercials and the producers and the swap dealers are leaning the other way, suggesting that these are hedging positions. Yeah. They're probably expecting the market to perhaps make a top, or it's just protection, just risk management or control, and uncertainty at these extreme levels. So what does that tell us? It means that the market is still positioned with the CTAs and the hedge funds all positioned to the long side, and increasingly so. But there's a sign of danger here when the commercials and the producers, with rather large positions, 376 short, 88 short, compared to only 220 long on the managed money side. 321, okay, fair enough. Long on the commercials, quite a big position there, but still outweighed by the short positions on commercials and producers, and of course the retail traders, you and me, all looking to long. So having said all of that, we can go back to the charts and have a look quickly. I'll wrap up gold and then hand over to Richard. I'm sure he wants to talk about stocks in the next 5 minutes. Let me quickly switch over and It's a bit clunky, this setup on StreamYard, I have to say. It's not the easiest. Going back to the charts. All right, here we go. And then let's have a look at our gold chart. Back to where we were. So here's the gold day chart. Considering all the things we've just said, it is quite possible that we'll see a pullback. It's also quite possible that this market will just go rip-roaring higher and keep going up. Now, we have a short position on gold, and we took the short position pretty near the top after forming that reversal tweezer top daily candle following a hesitation doji. Tweezer top, beautiful, and we went short. We've been short ever since, and although it hasn't gone anywhere, hasn't stopped us out, but it hasn't really rushed into any great profit. Because of all of those problems that we're seeing on the COT report with managed money and the traders, hedge funds, CTAs being long, whilst commercials and producers are short, there's quite a lot of uncertainty. So in order to offset that risk, although we have moved our stops to break even at this point, so we don't have any risk on this trade, we got at 30, just under 3,050, and we're now at 3,025. So we're in profit. Our stop losses at break even. But still, before I moved my stop to break even, I hedged that trade with a long position on silver. Now, I'm only mentioning silver because it goes hand in hand with my gold trade. And we bought silver on this dip, on this reversal candle. We did break the trend line, which made it weaken, look weaker. Of course, any break of the trend line, although it may be a false break, ultimately still signals an attempt at breaking the trend line. And it shows that something gave way and that not everything was perfectly the way everyone wanted it. So we did break the trend line. We've tried to get back above it, but we've gone long on silver simply to offset the short on gold, which is uncertain because of the way that the COT market, the COT report shows the positioning in retail traders, producers, commercial money, and also the hedge funds. So a lot of uncertainty there, and we are at extreme levels. So I think, if anything, personally, I think we could have a mean reversion here. Look how far we are away. This is gold on the 4 hour. I want to go to the day chart and show you how far away we are from all the moving averages. The closest moving average is the 20-period moving average, and that's all the way down at 29.45. We're trading at 30.24 right now. So a long way down just to get to the 20-period moving average. And whilst we're above the 20, the whole time, whilst we're above the 20, we're still bullish in the short term. The 20-period moving average is the best moving average for indicating short-term momentum. So we're above it, we're well above it, and we need to pull back to it a little bit, or we need to just hover in this region or this range and let the 20-period catch up with the market price in order for us to move higher. But we're not going to move higher whilst we're still so far above the 20-period moving average, the trend line, the 50, the 100, and look where the 200 is. Ideally, we'll get back down to the 200 before the next rally. Now, if you look at gold on the day chart, we don't often get to the 200, but we do often get to the 100. And every time we get to the 100, we start a new rally. Look there, this is a really simple and important tip. Every time we get back down to the 100, that's the black line in the middle here, we start the new rally. Get down to that again over here, start the new rally. Now, in order to get down to the 100-period moving average, down here at the trend line, just above the trend line, we'd have to pull all the way back to around about 2,800. I'd say 2,820 to 2,780 in that region. Let's center it around 2,800. And that would give us a proper 100-period moving average pullback, some time thereafter to consolidate, form a new basing range, and then to move up to a new higher level. I think gold could ostensibly keep going up for quite a long time, but it is getting a little exhausted. We are seeing some messing around at this top level on, in the commercials, producers, hedge funds, all jostling for position, wondering what's above us, what's in that blue sky. But at least knowing one thing, we all know one thing, where these pullback levels could be. And when the market lacks some direction and some certainty, and we got all this sort of variation in positioning right at these high levels, the most likely thing to do is for us to just pull back. It's the thing that the market knows how to do the best. And red line, the squiggly, juddery red line, is something that I think we could do. So if we pull back to the 50, let's say, well, the first stop will obviously be this trend line, and we may just bounce off there. and that's around, if we pull back there today, that's around about 29.50. But if we break that trend line, we could get down to the 50-period moving average. That's at 28.80, and then bounce back up to the underside of the trend line and the 20-period moving average right there, and then continue on downwards down to the next trend line, and the more sensible one where the 100-period moving average will meet us at that time. That's around about the end of April, about three and a half weeks from now. We should be, if this path plays out, somewhere down around 2,800 and looking for opportunities to buy. And I guess we'll form a bit of a range around the 2,800, maybe dipping down a little bit further, bouncing up, sort of forming a range like we've done here in the past, just looking at this zone here. So we get up, we pull back, make a range, and then move up higher once we've tagged the 100-period moving average. Same thing here, tag the 100, make a range, faff around for a few months actually, and gold often does this. Expect probably 3 to 6 months of sideways movement once we've formed a top. And I'm not saying we have formed a top just yet, but if we have, and we do move down into these sorts of ranges, expect 3 to 6 months. And then if we are trading gold in a range at that point, then we'll be looking to buy the dips, exit at the tops, buy the dips, exit at the tops, until we get to a point, excuse me, where the top is exceeded and we move on higher and we break out of the range and carry on moving up. So that's my general strategy on gold. And we can relook at this a little bit later on in the session if you want to. We can have a look at the shorter term charts and zoom in to see what sort of day trades we could take. But I think I'll hand it over to you now, Richard, in order to talk about stocks.
Yeah, sorry, I was a bit late there. I had some issues logging in. I don't know if you've heard of, Walter joining us. I think there's a blackout in the area he's at, so struggling to get in. But yeah, great analysis down gold, especially I do share your sentiment. Question now is, has that correction started, or do we want to pip another high? But yeah, one thing in gold does really well is it can correct for a pretty long time and move sideways, right? When was that one between 2018 and something? I think it was like 2-year correction. Pretty volatile, up, down, frustrated a lot of people. And then, it's almost like it absorbed all that previous momentum. And now we had this heck of a strong run back up again. But I do think cyclical wise, that gold is nearing, if it hasn't yet, nearing I think a very important top with a considerable pullback, as you showed on your charts there.
Yeah. I think, as you say, gold tends to, and the problem with gold is there's no yield in it. So when you're holding gold for these 3 to 6 month periods, if you are a gold bull, sort of a swing trader or a longer term swing trader, you'd be holding gold. You could hold it for a month, 2 months, 3 months or longer, and there's no yield on it. So you're not going to pick up anything from your broker, but your broker will definitely charge you quite a lot. So when we get into those range periods, unless you want to be paying through your nose every day to your broker, we've got to be picking the bottoms, getting out of the tops, picking the bottoms, getting out of the tops. And of course, when we get out of the top one day, it'll break out and move up dramatically like it always does, lock everyone out. And it's really at that point just a bit of luck if you happen to be long at that time. But gold does that. It locks people out. So does Bitcoin and a number of other instruments. So once it gets going, everyone's kind of negative about it. Everyone's out of the market or sidelined or in cash or gone short. And the market suddenly moves up by, $400. And most people get left behind. Yeah,
exactly.
Yeah.
All right. Do you want me to share my screen quick?
Yeah, if you got something. Otherwise, I can carry on when you're ready with oil.
I'll just quickly show mine. There's not too much happening at the moment, price-wise. Or setup-wise, should I say. So I'm going to be looking at the NAS 100. That's the NASDAQ, the SPX 500, as well as crude oil today. Those that have followed this strategy since we've started here, last week, Thursday, I didn't do a session on Friday. And this was on crude oil. We had a beautiful strong move up. price making higher highs and higher lows in crude oil. I'm just looking at the 5-minute, not on the bigger time frame. But those are familiar with the strategy. I'm looking for reversals during these colored vertical lines here between the 9 a.m. and 11 a.m. Eastern time window. And you can see during last week, we had multiple reversals that occurred during that time window. Not this one so much. It was just a high low. But this was a beautiful one here on Wednesday. Was that Wednesday? The 20th was, no, it was Thursday. This was a bit of a frustrating one on crude oil. Let me just get that line back. What did I do? There we go. Markets just pumped up there. It was just way too quick for me. And sorry, not the markets, crude oil price-wise. But during the overnight session, looks like a nice, beautiful zigzag. These boxes you're seeing there were previous day's lows, as well as the overnight session low. You can see what happened there, and it's exactly what I'm looking for. Price breaking, reaching a little zone or area where you had previous highs or lows, and then giving us a liquidity sweep, meaning that price runs those areas, and then generally you get a reversal back to the upside. And then I'll switch to a small time frame, like a 1 minute. You see these small little boxes here are actually fair value gaps that formed on the 1 minute time frame, but price just shot up from here. Did not manage to get in. And then it was on Friday, the 21st, same thing. Price actually took out a overnight session low, and you can see what happened. A beautiful sweep there and a strong move back upwards again. Friday was a public holiday. James is also here in South Africa, so I did not trade. And we had a beautiful setup right there, as if I would have taken it. That would have been a beautiful setup. And again, nice strong move back to the upside. Now, if you look at today's current price action, crude oil hit around about 68.80, and we had a strong decline into my trading time window. Again, this is a time window where I want to take a trade, and this goes the same for the ES and the NASDAQ. The only thing is there's no real levels that price has run during that time frame just yet. So price could either make another move back up if it takes out that 68.80 level, then give us a reversal back lower, drops back into this range. Then I'll switch to 1 minute time frame and then start looking for the rest of my strategies, procedures to potentially take a trade. So a little bit far off, although crude oil can move really quickly. I think the market already, or the stock market already opened 7 minutes ago. On the downside, if I wanted to trade back up, I would like price to take out this cluster of lows over here. All right. So that was Sunday's open market low was around 67.85, made a little dip and moved back up. So they're not all on the same levels, which is perfectly fine. You can just be a little bit generalized there. I want to see where's my path tool to the downside, a drop within my time window, something like this, followed by a reversal back up. Right, so I'm not really too worried about which direction I want to be trading intraday. I can take both either longs or shorts, regardless of what the higher time frames are telling me, simply because I know during this time window that you quite often do get reversals, but that's after price running specific levels. Right, so all Richard, of this is prior to, yes?
Sorry, I'm just doing a sound check. I dropped off earlier. Just want to make sure that everyone can hear me, but it sounds good.
No worries.
Sorry, mate.
All right, cool. Can you hear me properly?
Yep, all good.
Okay,
perfect.
Sorry. Okay. Where was I? All right, so that's the crude oil market, WTI. We had a similar thing here on Friday, and this is on the SPX 500 CFDs. Price moves into that time window, and you can see this clearly how beautiful this one set up. It was an actual low. It came into a previous area where there were clusters of lows. This is actually a few days prior to that trading day on Friday. I think this is Friday, Thursday, Wednesday, and Tuesday. So Tuesdays and Wednesdays, cluster of lows give us a little bit of zone. Price pulled beautifully into it, found support, and that was actually the low on Friday with a strong move back upwards again. All right, so currently without trying to miss anything here. Price obviously been trending upwards, and this is only on a 5-minute chart pretty strongly. So you'll see that I dropped 2 of these lines in here. And they actually go back all the way to previous clusters of highs and lows. In this case, these clusters of highs, you can see a lot of mess going on here, potentially an expanding triangle type of formation. They typically form during very volatile times. There was a bit of a gap even to the downside. And this takes us all the way back here to the 7th. And this whole thing starting here around about the 6th of this month. So quite a while back, beginning of the month. And prices now, you see this red line over here, getting very close to a previous lower high. And then we had these clusters of highs to the upside. So a lot of highs and lows. Is going to be difficult trying to figure out if price should reach them, which one I'll be more interested in trading if we do get a reversal. Again, I don't just jump into a trade if price actually reaches those levels or breaches them. I want to see price breach them and then give me reversal signals. Okay, then at that stage, I'll switch to the 1-minute time frame, see if there's fair value gaps to look at, is there price structure breaks, and those sort of things. Generally, Mondays are quite quiet with the strategy. I quite often find that we get setups around about Wednesdays, Thursdays especially. But although last week there's been quite a few. This, again, goes across the board on the markets I'm watching, especially with this strategy. I only follow WTI crude oil, the SPX 500, as well as the NASDAQ 100. All right, so a nice strong move up there. This obviously at the stock market open, price continuing upwards. Let's see if we see a break of 5,749 again. That's from about the 6th or 7th of this month. Those cluster over highs will make it even higher. If it busts through, then it continues higher. If it then breaches and reverses, then that'll be an opportunity I'll look into on a smaller time frame to see if I want to trade that. All right, so then we have the NASDAQ. NASDAQ on Friday, also beautiful setup, which is a bit of a bummer. I was having a barbecue, actually, with some friends during that time. But again, it was public holiday in South Africa, but similar to obviously what the SPX 500 has done, price moved lower into a zone, and I drew a zone here just because there were, again, a cluster of highs and lows of previous days, okay? Now, when I draw a zone rather than just a line, I'm quite comfortable if price enters that zone, because you never know if are they just going to run this low, or are they actually going to breach this low over here on the 18th, rather than waiting for the extreme to be breached. I'll be a bit more forgiving and see what happens if price actually enters that zone. If I do then get some sort of reversal signal or reaction from it, then I'll be happy to take that. And in this case, that was the low of the actual day. Nice strong move into it, and boom, straight back to the upside. All right, here on the NASDAQ, and sorry, I just quickly want to talk about Wednesday as well. And this, for those viewers, the strategy is called the morning liquidity sweep. It's just because of, I wouldn't say it's a fact, but it's just a regular occurrence of how price tends to, on these 3 markets, take out levels or do a liquidity run or sweep, or some call it a liquidity grab, whatever you want to call it. And it tends to happen during the 9 a.m. to 11 a.m. mark that you get these beautiful reversals. We had a strong one back up here, but price did not take out the overnight session low. So almost gave a double bottom sort of look to it. Straight back up, took out these clusters of highs over here. It was set during the overnight session. And you quite often see if you have these highs or lows, it's very close to each other, or clusters formations. That's typically makes for a really nice target if you wanted to trade towards it. But in my case, we typically get a liquidity sweep. So price breaks it, and we had a strong reversal lower here. So similar to the SPX 500, on the NASDAQ, I've got this level up here around about 20,186. And you have to go back quite a few days. Again, clusters of highs and lows, in this case, lower highs, around about the 20,186 level. Slightly above that, we got this little lower high at 20,252. So ideally, I'd be comfortable to take a short if the NASDAQ reaches those levels, again within my time frame, and then give us some sort of reversal. It looks very far, but the NASDAQ can move very quickly and cover quite a lot of distance. Here we see a move back up in crude oil. Doesn't look like it's going to reach these overnight session lows or this cluster down here. So maybe this is the one to look out for. That's pretty much it from my side, what I'm looking at the moment. Still a little bit of work to be done here from price perspective before price actually reaches these levels. But I'll keep an eye on it on the side here, and I think I'll hand it back to you again, James, if you want to show us.
Alrighty.
Before you do, actually, we just had, I think, flash manufacturing and services PMI.
Yeah.
Released for those that do follow that. And we do have a little bit of volatility, but not too much. But yeah, I'll keep an eye on things here. Sorry for interrupting there, James.
No worries.
You can take the reins.
All right. I'm going to find my screen again now. All right. Actually, it's interesting, Richard, what you were saying about stocks. Right. What's happening?
Is it taking a while?
I don't know. There we go. Okay, we're on. So, yeah, I've just got out. I've been long on NASDAQ and S&P. We got long there and we got long there. This was a bigger position down here. So we got a good profit.
Just hang one sec, James. It's not showing up.
Okay. It's showing on... it seems to be... oh, hang on. It's not moving, right. Right, let's just reload this. Okay.
All right, something's happening. There we go.
Is that showing the full chart on NASDAQ? Yeah,
Yep.
There we go. Okay. Yeah, so I was long over here and long down here. This is a bigger position. I just literally took profit about an hour ago on both of these positions. That one's small loss. It was a bigger position down at the bottom. But only because we're at the 20-period moving average, and that's the short-term momentum indicator. But also it's this area that you were talking about. There's a lot of faffing around right where we are now, perhaps a touch higher, like you were saying, up to about 20,300. And the 200-period moving average, that's this purple line coming up from the left above us. So if this 20 doesn't offer... so in a short-term trend, we'd expect the 20-period moving average to reject this attempt up, and then the price to be rejected here and move down. But we do have the 200-period moving average above the 20, and that might be a little bit more tempting because we don't get there often. We've just broken down through it, and we may need to retest it. I think that's probably more likely, but I closed my positions because I'm just a little worried about that 20-period moving average. Exactly the same thing on the S&P. I closed my S&P position as well about an hour, maybe 2 hours ago. We got a long right at the bottom at this order block. Pretty simple trade. Just touching the order block, got long. And I don't know, it's a few hundred points in profit. We've taken that profit now. But look where the 20 and the 200 are in confluence there together. And that creates a very, very powerful resistance level. And also, there's a previous swing low at more or less the same price. And there's another one, a couple more down here where we are. Well, they're slightly below us now. There's another one over there, another one over there. So an awful amount of resistance just above us or where we are, provided by the 20-period moving average, the 200, and all of these little tendrils reaching down and these swing lows at the same price. So I don't know what's going to happen next on these, but in the meantime, I've got longs on some of the other names, which we're not going to talk about now, but we're basically long on MSTR, Tesla, and Coinbase, and Google, and a couple of others.
Nice.
We were also short on the German 30, and I got out of that for exactly the same reason. And this is super interesting. Now, the NASDAQ and the S&P, I got out because the 20-period moving average above them is providing resistance, and the 200. This case, we've been short, simultaneous. It was initially a hedge against the NASDAQ longs. And I was expecting either both of them to move up or both of them to move down. But NASDAQ moved up, German 30 moved down, and we got profit on both of them. And I took my profit here for exactly the same reason, but the opposite, the inverse. So we're above the 20. We touched it from the top in this case, and that will probably form some sort of support, or not. I don't know. We've also got the 50 below us, and the 100 and the 200. But I would be looking for a move down to the 50, or perhaps back up towards this channel line at the top again for a potential short. So we're out of all the stock indices right now.
I remember we watched that.
I think that aligns with what you were saying, Richard.
Yeah, we were looking at the German 30 as well last week. I think someone asked us in the YouTube chat about that, and it was quite delayed behind what's been happening with the US indices. And then now there you have it. Be interesting to see what the JSE is doing on our side, but obviously we don't follow that. But they tend to follow what the Americans do, from time to time. Or eventually shows.
Well, I mean, it's not that often that they move in completely opposite directions like we've seen. And for quite a long time, if you look at the German 30, it's just been going up. Okay, we've had a lot of faffing around here, but at the same time as that was going up, NASDAQ was going down, and that's the faffing around at the bottom. This was faffing around at the top. So literally completely inverse opposite pictures, which is a little unusual. But I think a lot of that's due to war and energy costs and the stock exchanges and interest rates. And also we've seen retail sales different, all sorts of numbers have been different in the different regions. So, but you were talking about oil, Richard. What I would like to do is to have a look at the COT report.
Yes, I was actually going to ask you earlier. Please do.
Yeah.
I do. So I do from time to time glance over that, especially if you want to get a bit of a bigger picture sort of view. And I think what COT reports get released every Tuesday, right, of the week.
Yeah, sometimes they're a little delayed, sometimes, but yeah. So that should be showing, but it's not.
There we go. Something's happening. Cool.
Okay. So we had a look at the COT report for gold, showing that there's a big discrepancy between producers and commercials, and then managed money and non-commercials, swap dealers, everything. So really a big fight going on here, quite an interesting scenario. All sorts of movement going in quite extreme positions in both directions. We'll have to see how that resolves. But if we look at crude oil on the COT report, and anyone can get these reports, by the way, you just go to barchart.com. It's free. You have to put up with some adverts, but that's okay because it is free and you have to pay for it in that way. But let's look at the COT report on crude oil. So look where we are, first of all, on the seasonal chart. This is for the last 5 prior May contracts. We're looking at the futures here on WTI. You can look at Brent crude as well if you wanted to. They're pretty similar. I've had a look at both of them. I trade WTI, not Brent crude. But look where we are, that big drop down on the futures, 57.70. I don't know what that's actually reflecting. We'll have a look now. And then the average price over the last, is that the average? Which one is the average? Have I got it completely wrong? Oh, the average drops off. Is the average price.
Substantially. Well,
that's super interesting.
More than $10.
Yeah. So we're about average right now, but I don't know how far I suppose in a month or 2 or 3, there's a much lower price coming up on average in history. But let's look at the commitment of traders. So I'm going to zoom in to this. Now, let's see where we are. Commercials, 702 long, 885 short. So not a big difference. Adding slightly more, taking off slightly more from the long side than the short side, but generally slightly angled short. Producers, 566, 325 short. So angled slightly, not hugely, but somewhat to the long side, and no real change in positions over the last, as at the last report, 18 March.
Yeah.
The managed money, and these are fairly large positions now, 175 long and only 83 short, but adding quite a lot more to the short side, a huge amount more, 20,000 contracts compared to 4. So we've been very long on managed money, but now switching and swapping over to the short side, but still biased long. And then non-commercials also, no one really knows whether these are hedges, whether they're hedge funds, CTA type funds. No one really knows unless we delve into this info a bit deeper, and I'm not sure if you can accurately. But nevertheless, sorry, Richard?
I don't think you can.
No. But nevertheless, let's assume that non-commercials are either hedge funds or institutions or hedges, and we're at 316 long and 149 short, adding roughly the same amount to both sides. So again, angling to the long side by quite a lot, actually. And then swap dealers, 51 long, a huge amount of short. These are the hedges. That's the biggest number. No, it's not the biggest number on this page. The commercials is much bigger, but a big number to the short side for the swap dealers. So so swap dealers, I mean, I hedge a lot, so I know the mind of a hedger. When you're hedging, you're either completely confused and you have no idea what's going on, and you just hedge because that's all you can do.
You know exactly what.
or you know exactly what's going on, and everyone else is on the wrong side. But I think that latter scenario is less likely because mostly traders don't know what's going on. So I'm assuming they're hedging in because we got massive positions here on the commercials, both long and short. It's a messy market. We've dropped quite a lot, but we're not that low. We've got the Moab level. We'll have a look at the chart right now, angling for a massive breakdown. So the swap dealers are maybe anticipating that and putting on a huge short position overall between them. And then other reportables, that's people like you and me. And I know which way this will be angled because I watch people comment on X and YouTube all day long. And I know that all the retail traders are long on oil. I'm short. Doesn't mean I'm right. Maybe the retail traders are right. I don't know. So again, a little bit of a mixed picture, but just in summary, you can see how far we drop off in a few months' time. I'm not that might. I think that 5-year average is an anomaly brought about by that when oil went to just about zero or below zero, and I think that's an outlier. Yeah,
so that was pretty insane to watch that. I watched that as it was happening.
Yeah. So let's ignore that. So we're about at average price for the season. We made that drop off is neither here nor there. But looking at the positioning, pretty equal on commercials. Producers, if anything, slightly to the long side, not a lot. Managed money, more to the long side. Commercials, more to the long side. Swap dealers, heavily short. And the retailers like you and me, very much to the long side. So let's go and have a look at the chart. And now I've got to do something here. Stop screen. And share screen. Okay, that's showing. And let's go to oil. WTI oil. Now I've got on my charts here, by the way, just out of interest. So this is my energy page. So I've got uranium. I'm mainly trading currently uranium, natural gas, and Brent crude oil. I'm not trading, sorry, not Brent crude oil, WTI oil. I'm not trading Brent crude. And these are the uranium futures, which I like to have the futures charts for whatever I trade, if there are some available. Uranium futures, and then I've got gas and then oil. So I'm trading this chart on the bottom right. It's WTI oil. And I'm going to show you the day chart overview. And I've been showing this picture for, I suppose, 2 years now. So it's kind of a bit boring. But you can see all the short positions we've taken over the last couple of years. Generally, our short positions, and most of them we've got out pretty near the bottom. I've actually traded this really well, much better than I've traded some other things over the last couple of years. But this has been good, along with natural gas. So luckily, the market's just kept on going down, and because I'm stubbornly short, and I still remain short. And if we look at this bigger picture chart, the day chart, you can see we've got a couple of things going on. Massive move up, crisis going on, Middle East, Russia, Ukraine, etc., all happening around here a little bit earlier up to that, and coming down. And now in this last sort of year and a half, we've had this downward facing channel, but with a flat bottom. So actually it's a descending triangle rather than a channel, but it may turn into a channel if we break that flat bottom where I've written Moab. So there's the flat bottom and there's the triangle top coming down. And every time we've got there, the market's sold off. Now we may have to get there again. We haven't got there for a while, quite a long gap between the last time we visited the top of the channel and now. So if we do move up, I have to allow for a move all the way back up to the top of the channel, which is at $75. We're currently trading at 68.5. So I'm allowing for that, always allowing for that top channel line, this order block up here, and roughly looking at this shallow rising yellow channel as well, because we may just trade up within this channel up towards the top channel line and then down again. So I've got a short position currently on from the last red arrow that you can see, which has now just moved into a negative position, but it's not a full position, and it's a position that I'm starting to rebuild after having taken profit from these longs earlier on a few months ago, a couple of months ago. We took profit down here somewhere. I think we took profit at this red line, and or maybe it was slightly lower. I can't remember precisely. I don't want to make things up here. It could have been lower actually, or slightly more or less where we are. Anyway, our last tranche on this sort of candle over here is our new entry into the next position. So it's a small position which needs to be built up and built into. Now we've got all these moving averages above us and this channel top. We'll look at the bottom side in a minute, but there's the channel top. We've got this very narrow, skinny yellow rising channel, which I'm watching closely. Again, the top is a resistance level, the bottom is support. So we'll see how far up that channel we can get. And if we can get up all the way through this channel, up to the top of that bigger channel, that'll be perfect. And I'll be looking to add some more shorts up there. However, I'm not sure we'll get there. And because we've now tested this Moab level so many times, and we've come down on it quite forcefully on this occasion, I think we may have a muted bounce like we've seen on previous occasions. So, for example, there, we didn't get up all that high, in these sorts of regions here. And so therefore, I'm going to be looking at the 100, the 50, and the 200 period moving averages just above us for other opportunities to short. When we get to those levels, I'll be watching for things like 4-hour reversal candles or daily reversal candles, things like one up, one down, bullish, in this case, would be bearish engulfing candles, wick candles, tweezer tops, any of that sort of thing, the usual candle patterns that one would look at to predict a reversal. Quite often what I do with WTI oil, rather than relying on the 4-hour charts, which I do, my 4-hour charts like my scalping chart. So that's for my quick intraday entries. But with WTI, often it's a good idea to wait for a daily chart analysis reversal in order to get short rather than chopping around. And you can see how messy WTI and Brent crude oil generally is. It's a messy it's a messy burning thing, and it's a messy trading thing too. And it's very political. And it runs the world, basically, oil. So, of course, it's going to be a messy kind of chart. And that's why a good idea is to wait for day chart reversals before getting in. So where we are today is it's moving up against our position. We're more or less at the price we got in, slightly above it. And I've got all sorts of levels that I can keep an eye on above us, and I can call them by number right at the top of the channel here at $70. 100 period moving average, 70.50. 50 period moving average at 70.80. I like the 80s and the 20s and the 50s particularly. And then we got the 200 at $73. So any of those levels there, any of those numbers that I've just called out are opportunities for me to look for shorts, but probably I'll be waiting for a day chart reversal candle or pattern or setup. And it could even be something like divergence on the stochastic, or some other collaborating tool that I use, an order block that we reach on the 4-hour chart, or all sorts of things that you can keep on. But when we spot those things at any of these numbers that I called out, I'll be looking for another short position on WTI to add to my current short position.
Yeah.
Did we
can
look
I
at the
quickly
report?
show my WTI chart? I want to show you my trading view chart. So I'm pretty much with you there on the descending triangle thing. Hypothesis, if you want to call it that. Let me just get that ready. Which one? There we go. Okay, it should be coming up now. Can you see it?
Yep.
Yeah, okay, cool. Right, I'm just looking at a weekly here so we could fit in quite a lot of data. Obviously, it was here in 2020 when crude oil actually went negative, right? Now, this is looking at the CFDs. And if you had to look at that actual contract month, I think was it the March contract? I can't remember 100%. That on the future side of things, I think it went as low as -30 or something like that. I can't remember. Makes it extremely difficult from, let's say, Fibonacci analysis or that sort of stuff to actually figure out which lows you should be using if you're looking at a retracement, for example. I mean, here it just so happens on the CFD side of things, since that low that went minus to this high that we had in March 22, it looks like a 5-wave decline. Potentially corrective. I'm thinking what's happening here is I don't think crude oil is going to go negative again, because if it does blast through here and just drops, there's nowhere else to go from a chart analysis perspective, if you understand what I'm saying. So I'm thinking this whole mess here is corrective in nature. Whereas you pointed out, and I think this is what you're saying, that this is a descending triangle. Was that what you're looking at, James?
Yeah.
This is something I'm looking at. Obviously, price has been bouncing off.
Yeah, exactly that.
Level, a little bit lower. Boom, 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 and eventually, it's probably going to give, in my opinion. So if this is, and we'll obviously never know until after the fact, but you can also try to anticipate what might be happening. Then if this is a descending triangle, then triangles, if you study triangles a bit more, eliticians will tell you there are 5 phases or sequences within a triangle. They typically label it A's, B's, C's, D's, and E's. All right. Now, I won't label this as a B, just because this looks like a zigzag internally to me. It came very close to this previous low. We had what looks like a zigzag up here again for the C. And now we either have that D in, or it's going to do and just frustrate the living hell out of everyone for a little bit longer, which is what crude oil typically likes to do. If I could just find that tool on my other platform. The D is either in my opinion, or it's going to potentially do something like this and then give us that E later, and then this. Now the question is, are we looking at this? The D is not done yet. I think that is a possibility, because this doesn't look zigzag in nature. It just looks like one drop lower, if it makes sense. Right, so overall you want 5 internal waves, A, B, C. Do we have a D? Potentially. We are moving upwards. If we're heading into an E here, then to a very high degree you'll find that these internal waves tend to repeat and respect specific Fibonacci retracement levels. So assume that was an A, and you take it to your B wave, tag the 50% retracement, which is not a Fib ratio per se. Well, not per se, it isn't. But it moved halfway from that decline. So 50% it hit there, spot on. Now,
Yeah.
since we've got a flat bottom, we can't really use Fibonacci ratios in the bottom here. Assuming that we are moving higher in that E wave, and assuming that we repeat that same behavior, then that 50%, I mean, it can do a very small one. I mean, anything can happen. And only retrace to the 38.2 level. But that 50% puts us close to that 73 mark, where you actually mentioned you got that. Which EMA was that again that you were talking about, James?
At around 73.
Yeah, so around about 73.
It's the 200 on the daily,
The
on the day chart,
EMA.
200 SMA.
So very close. I don't have that on here at the moment. I guess I could go drop that in there.
Yeah, that's the daily 200 simple moving average.
Which one was it? This one. Come on. Why is this not working now? Oh, it's because this is a bloody free version where it should have an EMA on it. You see, I don't trade well. I just use it for analysis now and then. But anyway, what is this now? Now something popped up there. Settings. It's because I double clicked.
No. Go to, it's just called, just type in moving average. Moving average, you don't want the ribbon, all of that.
Yeah.
Oh, maybe it won't let it, yeah.
It's being funny.
Well, it's telling you they want your money.
That's what they want. Let's just make that a visible color that we can all see properly. Let's make it red. Let's make it a little bit thicker. So that's at 200 EMA right up there.
And that's on the 50%
it's
level.
Sort of running level, it could between that 50%. I mean, that's quite extreme, but what will not surprise me if we are right about this, that we could be bouncing in that E wave, that price could actually be making a move up again. And it's not unrealistic if you look at all the internal price action here. Every time price sort of reaches that bottom top zone, you get quite a substantial move higher, right?
Yeah.
That first bounce could very easily do that. Again, get everyone long, and everyone's thinking crude oil is going to go up, and then boom, potentially down.
Yeah.
And then when that does break eventually, if we're right about this whole thing, then we might just get a move lower like this that retraces a decent portion of that initial bounce that we've seen to the upside. So who knows? I mean, this is pure speculation. But the one thing that you mentioned there, that you think we're dealing with a descending triangle, that's something I've been thinking for quite some time. And if that is the case, then what can you expect next? In my opinion, a bounce higher. Now, the question, again, just is that a bounce higher in an E wave, or do we still have this D wave forming, doing something like that? Price runs more sideways for quite longer. Frustrate the swing traders. Yeah, that's potentially what could happen.
Can I switch back quickly, Richard?
Yes, please do.
How? All right, let me try again.
I'll stop sharing. Is it working now?
The only problem is you got to look at our ugly mugs for a little while in between. All right, there we go. So, yeah, so all right, a descending triangle, which is what we have on our hands, not the way I've drawn it. You're better, Richard. I've got a channel, not a descending triangle drawing, but just imagine the flat bottom underneath there where it says Moab. Has about a 70 to 75% chance of breaking out down through the bottom. Those are pretty good odds. There are some chart patterns that just have a very high probability of working out, and a descending triangle pattern is one of them. And what's also nice is that if we close above this falling top channel line, or triangle top of the triangle, If we close above there, then this is immediately invalidated, and we can delete it and know that we're wrong. So we've got a beautiful line of resistance above us, which is our line in the sand, and it's moving lower all the time, which I like, rather than a horizontal line. But we've got this sort of escape chute, I suppose, this yellow thing that we're busy, exactly what you were saying, Richard, that could take us all the way back up to the top of the triangle, which is actually at 75 and I'll call it 76, or to the 200 period moving average at 73. Either of those would be great. We're already at 68, almost $69. So these moving averages aren't very high above us. But if we get to the top of the triangle here, to the top of the falling triangle, descending triangle, that would give us an excellent opportunity to resell. We may even get another sort of double or triple top along this line into this order block at the same time, maybe just at the underside of the order block. If I could just draw it in for you, it would look something like, maybe it won't work, but that's going to be too fast, isn't it? We won't get there. But we could just sort of force our way up into there. But more likely, I'm thinking this 200 period moving average, or just following along and dribbling slowly up. I don't think there's a lot of impetus for this to go one way or the other, actually. So I wouldn't be surprised by just sort of a gentle melt up along here, up to this level, and then a rejection downwards. But my strategy is, no matter what, unless we break out and close above this descending triangle top, I'm going to keep shorting this market on every opportunity, and I will be holding on to my existing shorts. And I only have one existing short position right now, and it's not a massive position. In fact, it would be detrimental for me if this carried on moving down, because I'd kind of be locked out, because my position's only about, I think it's 15 or 20%. So I'd actually prefer to get some more on this trade. So if it keeps moving down now and just drops and carries on moving down, I'll have a smaller position but no drawdown, and some profit. But if it moves up and goes higher and then reverses, I'll have a much better position on that. So those are my squiggles, as you can see, that sort of thing.
Yeah. Nice squiggle.
Yeah. So that's all I've got to say about oil, really. And it is as you said, Richard, it dribbles and bounces, and it's a messy, choppy. And a lot of people don't like trading oil and natural gas for those reasons. It's a little unpredictable. It fluctuates according to politics. Every now and then OPEC says something. Every now and then someone from the US says something, or whatever, or a bomb goes off in the Middle East. And it's just a messy old thing.
Yeah, for sure. Very sensitive to like wars and political stuff.
Yeah. Yeah, and that's it. So no movement since we've been talking on gold at all. Nothing on silver, and very little on oil, actually. Just a little move up, but not much.
Yeah, I'm not seeing anything my side, to be honest.
Some Mondays are just super slow, as you said earlier.
For sure.
Yeah,
absolutely. I generally find the movement with a strategy generally happens Wednesdays, Thursdays, and Fridays, sort of midweek.
Yeah.
Do we have anything hectic on the economic calendar this week?
Yeah, we've got GDP. Let me pull that up for you quickly.
Okay.
Unless you have one there.
No, you can show it while you're sharing.
Okay, I've got it on my screen.
When's that? Thursday normally, isn't it? Yeah. And unemployment claims.
Yeah, Thursday's unemployment. I think there's a bit of Fed speak on, let's have a look at today anyway. I think GDP, is it today? 24th of March.
Final GDP, quarter. Thursday.
That's Thursday, yeah. So we've got a couple of European GDP numbers coming out. Not much today. Actually, let me get this on the screen. Yeah, so not a lot today. We've already had today's number, which was
PMI, wasn't it?
let's have a look.
Yeah.
Yeah, S&P.
Manufacturing and services PMI.
Yeah. Little negative on manufacturing, positive on servers, not quite good actually on the composite, 53 compared to 51 expected. That's quite a big improvement. And then not a lot else today. There's Fed Bostic speech later on in about 3 hours. And then I think GDP's on Wednesday. Oh yeah, and then we've got house prices, house sales, house price index, new home sales. That's quite important. Not one of the things that the Fed's necessarily watching. Then on Wednesday we've got the British GDP for the currency traders, inflation rather. Some more European GDP, inflation on Wednesday for the UK.
Mm-hmm.
And then durable goods, Fed speak, distillate, crude oil. When is GDP? I haven't got my précis here. It's on Thursday. Yeah. So jobless claims on Thursday. That's every week, and then GDP. It's be a big one. And then core PCE. That's another big number related to inflation. Expected to be slightly higher actually, and PCE meant to be higher. Yeah, GDP growth rate 2.3%, strong. Yeah, then we got the natural gas storage later on Thursday. And then this is also interesting for the currency traders, Japan CPI. This will be pretty interesting because Japan has kept their interest rates at the same level, pending what happens with CPI. Now look at what's projected, 3.1%. It just keeps on going up. And the Japs do not, sorry, I shouldn't say that. The Japanese do not like inflation. It's a big political problem within the country. And if we do see these numbers start creeping up like we're seeing over here, increase over there, increase over there, increase over there, these are projections, not actual numbers, that will put more pressure on the Bank of Japan to start looking at increasing interest rates. And therefore, potentially, so if that number comes in strong, we may see a potential increase in the Japanese yen and perhaps the dollar index falling even further. And that's it, I think. Yeah, so that's that stuff. Not an awful lot, but we've got the GDP. I think the Bank of Japan's CPI, relationship with CPI will be interesting. And then a couple of the other things, jobs maybe. Generally, the market doesn't react to the jobs numbers on a Thursday dramatically, but if they are completely out of whack, then the market will definitely have something to say about that.
Yeah. And then it's almost end of the month again.
Yeah. I mean,
it's been a long March, though. That's for sure.
Sorry? A long March.
It's been a long March, and then April's going to be full of holidays, I suppose.
Yeah, I'm just going to get my screen back. So just to really summarize on, there's such a lag in between. There we go. So yeah, just to summarize on gold, I said I'd really have a look at some of the day trading opportunities here. So let's have a look at the 1 hour chart. And generally, I think the best idea on any instrument that you trade is to pick a direction for the day or for the week or for the month or the year, whatever your time of reference is. For me, my direction on gold is short. My general idea is short until we break above and close above this recent all-time high at 3057. So that's my line in the sand. Until we break above there, I'm short on gold. If we do break above there, I'll hedge my short position, and I'll show you where my short trade position is by drawing an arrow in for you. And it's at 3042, and I think it was right there. Or was it here? Somewhere around here. Maybe it was there.
Very close to the top there.
Yeah, after that tweezer top, that's where it was.
Nice.
So, and that's at that. The stop loss on that position is now at break even, but it's in danger of this just bouncing back up again and moving higher. We haven't done anything really. We've moved sideways a little bit down, but not much. Big bearish candle on the hour chart. And your idea now, if you agree with me that the direction for gold is potentially short, you might think it's long, in which case you'll be looking for buy opportunities. But if you do think it's short, like I do, then you'll be looking for opportunities to sell into rallies. And we've just had a perfect opportunity. There's the 100-period moving average on the hour chart. There's the 50, both strong resistance levels, big, strong, medium-term resistance levels. There's also an order block right here. And we formed a wick high right into that confluence of the two moving averages, right in the center of the order block, dead center. So that was a good opportunity to sell gold on the pullback, slightly higher after that candle, back up to the 50, sell gold. You could have got in at 3029, 30380, somewhere around there. We haven't moved down much, only $11, but you know, that's
and it looks like a bit of a head and shoulders there as well. There where you got short. Obviously, the right-hand shoulder didn't form.
Yeah. Which is actually completed already, almost. That move might have completed it down to that resistance level there.
Who knows?
So maybe
it's
that was
moving
the bottom.
lower.
Yeah, it's moving lower now, but maybe that is the bottom and it won't get beyond there. But if we look at the 15-minute chart, you can see the similar sort of thing. The opportunity to, let me just refresh. Going back to the hour chart, I pointed out that spike high there. If you're trading off an hour chart yourself and not 15 or 5-minute charts, that was your entry clue. But if you were trading off the 15-minute chart, more of a day trader, the same price level right there also gave you an entry clue. There's the 200-period moving average. There's an order block. And we had a piercing pattern, which means, no, it's not a piercing pattern. Sorry, that's at the bottom. This is called a dark cloud cover candle. And what a dark cloud cover candle does is it makes a new high compared to the previous bullish candle, which we did there, fractionally higher high. And then we need to close more than halfway down the body of the previous bullish candle, which we did. We closed about, I'd say, 55 to 60% of the way down. So that's a reversal candle pattern in itself at the 200-period moving average within the order block, actually at the top of that order block on the 15-minute chart. So both on the hour chart, if you're more of a short-term swing trader, or on the 15-minute chart, if you're more of a longer-term day trader, you had perfect entry signals to short gold at the same time. If we look at the 5-minute chart, and I haven't done this just yet, but let's have a look at the same zone on the 5-minute chart. That's there. Not as clear, as you can see. Yes, we've got a piercing candle pattern on the 5-minute chart as well. But, you know, there's not a lot to work with there compared to what we had on the 15-minute and the 1-hour chart. And therefore, you sort of get caught up in this noise here on the 5-minute. But when you go to the 15, it all looks much more clear, beautiful, crystal clear, in fact. Couldn't be more clear. And then on the hour chart, even more so, because we've got that spike high up into the confluence of the two moving averages, very key moving averages, not just any old moving average, but the 50 and the 100, right in dead center of this big order block. And at those previous swing lows and highs and so on, perfect opportunity to reverse, which it did. And now we're moving down quite dramatically. And I trade off 4-hour charts, so I'll switch to the 4-hour just for completion. And there's our entry right there. The tweezers top, another 4-hour chart entry. So we've seen an entry. Okay, we were talking about this one earlier on the 1-hour chart, but on the 4-hour chart, we had a perfect entry. There's the hour chart entry that we saw earlier when we looked at the hour chart, and we're now moving down. Still not conclusive, though. It's sideways, still very much sideways for the last, I don't know, 5, 6, 7 candles. But we are under the 20-period moving average on the 4-hour chart. And for me, that's bearish every time. And we're curling underneath it. Look how it's curling over underneath the price underneath it. As it was rising, we bounced off the top. And as it's curling down, we're bouncing from underneath off the bottom and moving down. So a very beautiful chart pattern. But I'm not convinced enough to trade this on its own without hedging with a long silver trade, which is something I do quite often, because I'm a little bit of a scaredy cat in my trading. And so I always like to have a little hedge here and there, just in case that one goes wrong, or the worst thing that could happen is we get stopped out of break even. But if that does happen and this market moves up and we get nothing on gold, at least we'll get something on silver. If we get something on gold, I'll hedge my silver trade, keep that aside, and wait for gold to move down. And when gold eventually reverses and goes back up again, I'll then reverse my silver trade at the same time. That's it.
Nice.
You got anything on stocks, or have you taken any positions, Richard?
I haven't taken anything. Nothing's setting up. I can share my charts. Not much of an update. Bit of a quiet day this far.
Look where the S&P is just before you switch over. This is the key and crucial period right now on the S&P at the 200 and the 20, and that previous swing low. So if we bust up through there, I think we've got a bullish market on our hands, and we should start moving up quite aggressively. If we fail here, I think we're moving down to retest this bottom, and maybe even slightly lower, maybe the bottom of the order block, maybe even Bollinger Band all the way down here.
What's the price on that purple line there? 5.7.
This is at
5.775.
5.775. Yeah.
Yeah.
So
very close to it.
Almost tempted to short this, actually. Just if you gave me a choice right now, and I had to take a trade, I would definitely.
I'm on the same boat. I'm thinking both the ES and the NASDAQ. If it runs one of those levels, let me quickly show you. And it's very close to that purple line of yours.
Are you switching, Richard?
Yeah, I switched, but it's not showing up. How about now? There we go. Right, so on the NASDAQ, price continuing upwards, right? I was saying a little while ago that we're expecting a decent move upwards. Thus far, we've been getting it, but I do think this is getting very overextended now, especially moving into those levels at 20,186, 20,252, give or take. So if we're going to start seeing significant weakness, I won't say significant, but a pip of these two levels, or either one of them, obviously would reach this one first before it does the other, then that could potentially present a trade. That being said, it's only half an hour left. We only have 15 minutes left in the room, right?
Yeah.
The S&P, on the other hand, already took out one of my levels, 5,749. You were looking at the 5,775 sort of level, right?
Yeah.
Not much higher.
Richard, by the way, just to add to what you were saying, we also have a gap below us, a weekend gap on both the S&P and the NASDAQ. It's not showing on your charts there, but if you look at the...
I've seen the gap today. Big gap.
Yeah.
And here we go. This being on the 5-minute time frame. Quite a big gap here. Right. But I just want to go back to those levels of mine. You were saying 5,775. It's very close to these little highs over here. It was set here between the 7th and the 9th of this month. 5,783. Obviously, they don't always pip those EMAs perfectly. They can, extend a little bit and then typically leave wicks around them, if that makes sense. If I'm right? Sure. So even on this day, I don't know which day this was. That was between the 7th and the 9th. So it must have been a weekend. Gap lower.
Yeah.
So looks like we're also getting a gap fill here. I don't think that gap was filled. No, it wasn't. Up until now.
Okay. Well, there you go.
There we go.
Yeah, so
price is right in it right now.
Yeah.
So, I'll keep an eye on it, but I agree with you. I think we could potentially be in for a decline, whether that's a deeper pullback, back to new lows. We'll only be able to know that at the end of the week, I suppose, or we're completely wrong about it. But interesting levels. So yeah, I think it'd be decent levels to try to short. But obviously not just jumping into things. You need a plan, right? So price might as well just keep going, take out that upper level. But what I would like to see on a smaller time frame, again, these pink lines represent those levels I'm looking at. Let's get my path tool out. Price making higher highs, high lows. As soon as it moves lower and starts breaking
a
previous price structure point, then it might be an early warning or indication that we prepping to see a decline.
What's your overall thought, Richard, in terms of, let's say, the rest of this year? Or is that
I
not
don't
how
know if I've shown you the charts of this guy that runs a Neo Wave subscription, so I'm not punting his work, but he has a different take on Elliott wave analysis. Over the last, I think, I would say 20, 30 years, he tends to win all the forecasting rewards for months ahead. Not like giving you specific price points and stuff, but he gives you a really, really good, especially with the indices, the US indices, an expectation of what the markets might be doing over the coming month or coming year. He sometimes I don't think he does anything less than a weekly chart. Does weekly and monthly charts. And over the past 7 years that I've been sort of following him, I've not signed up with him. He sends out a free newsletter now and then if you want to subscribe to his more like intraday types of analysis. He was, over the past 7 years, for 5, 6, 7 years, I can't remember that I've been following him. He's been really damn accurate in like calling tops and bottoms. Not specifically saying this is a top or bottom, but drawing on his charts and giving a forecast. He's been very, very accurate with that. So maybe if you want to chat there to our viewers, I'll see if I can actually find that chart that he's.
Okay.
That's actually over here. Let me just pull that up for you.
Okay.
I'm looking at another screen. That's why I'll have to share this instead. Stop screen. Let's share this one. There we go. Should pop up there now. Again, guys, it's not any investment advice whatsoever. It's just that I do like sometimes having a bigger picture view of what potentially could be happening. And if it does then take place, it gives you quite a good bias of what you should be doing, or not should be doing, what you could potentially be doing, and formulate a plan around about that. So the title of this email was, we're in for a really wild ride this year. All right. And I've been following him since before 2020. And I think it was after this, what he called a D wave. Don't ask me, it's not the same as Elliott wave analysis. I don't even know how this works. But he's been thinking we're dealing with some sort of contracting pattern. And he's got you see these green boxes on the chart here, is sort of timing and aspects that he uses as well in side by side with the actual his type of Elliott wave counts, which he calls neo wave analysis. So when was this low in October 2023? He reckons that will not be broken. Yes, we might have a very wild ride towards that level, but I mean, this and that sort of like hexagon red on I don't know if you can see it on the screen here. There we have.
Is that the S&P? Can you zoom that in with your fingers, like squeeze it out? Yeah. S&P. Okay.
What's you see this hexagon here on the top right? It says D3 there.
Yeah.
It's been in there, and this is now a monthly chart. So it's been in there, remember now, for at least 2-3 months. But the expectation was that it is getting close to ending diagonal type of shape. And now we did have price coming down pretty hard, as we've seen on the S&P 500, NASDAQ obviously following that. And I think we are busy with a pretty volatile type of correction. Now, whether that first move lower is sort of here where that first dotted blue line stop, or it doesn't have to follow the path perfectly. Basically, what it's saying is that we're in a corrective phase, phase that will potentially not take out the October 2023 lows, and it will be very volatile. And thus far is what we've been seeing. So any bounces that we're seeing now, I'm treating it as corrective in nature to the upside. And yes, if it's a wild ride, you've probably seen this if you've been following the markets for any extent of time. Any bounce can be retraced up to 61.8%, 70%, 80% of that first decline, and then all of a sudden reverse again, especially when things get very volatile. And this is sort of like economically wise, and the times we live in, also the perfect sort of, situation or climate, if you want to say that will be, well, that can make this pattern come true, however it pulls out. I mean, maybe it forms a multi-year triangle. Maybe it's just an ABC and we're bouncing up in the B wave now. Who knows? But from a forecasting perspective, he's been really, really accurate, should I say, with I wouldn't say calling top and bottoms, but giving you a good indication of what you might expect. And if price then does follow that, and this was actually released in, I think it was in Jan. Okay. And I think this already played out a decent portion of that drop we've been seeing. Okay. So that's Mike, to answer your question. I think we're going to be seeing a lot of wild swings up and down, and I'm treating it, whatever it is as corrective. But in the back of my head, expecting a massive amount of volatility.
Yeah. The interesting thing about the stock market is that retail traders always want to be shorting it. And yet it's the most optimistic market of all of them. It's always going up. I mean, that's what it does. You can call it what you want. Some people think it's a Ponzi scheme. Maybe it is, but it's always going up. So I think the idea when you're approaching the NASDAQ, the S&P, German 30, Dow Jones, whatever, is that we should always be looking for long positions most of the time. Even in a bear market, the strongest moves in a bear market are the rallies, not the declines. So, we should always be looking to pick bottoms in the stock market and not be as willing to short it as most retail traders are. It's this whole, and I think it's sort of inflamed by the whole internet thing of, clickbait. If people post negative news, bad news, horror stories, they get more clicks, and therefore that's all you ever see on the stock market is crash tomorrow, burn out, it's all over, and you see it all the time. So just retail traders should be aware of that. Have you gone, Richard? All right, let's get the screen back on and finish this show off. Oh, he's back. Oh, there you are.
Yeah, I don't know what happened. Everything just went blank.
Okay. I don't know why the screen's disappeared as well.
Yeah, we got 3 minutes left. I don't know if you got anything or 2 minutes left. 3 minutes. Do you have anything to show there on your side?
Let me have a wee look, just in case there's something interesting. There's always something interesting, eh? Let's just have a look at where we are in these trades. So yeah, NASDAQ and S&P just moving up. Still, we're at the day's highs still at the moment, as are all the other stock names. But looking at gold, off sharply. That's a nice big drop. I was tempted to close this position on this rally, but as I said earlier, we just approached the curling over 20 beautifully, tagged it twice, moving down. Lovely. Bitcoin, I'm long on, of course. I've got quite big positions on all three, Ethereum, Bitcoin, and XRP. And then WTI, yeah, it's still moving up a fraction, but not very vigorously. And we've identified the levels earlier that we'd like to short into, somewhere around, maybe at the top of this range, maybe at 70 and a bit, 73, where the 200 is, or the top of the channel at 76, 77.
Yeah. Where's the crude? Oh, sorry for interrupting. Bitcoin at currently, price wise.
Sorry, say again, Richard. You dropped off.
Where's Bitcoin currently, price wise?
just under 88. It's just ticked over 88. It was just under 88 a few minutes ago. Okay. So nice big move up here on Bitcoin. But still, as I said to some of my folks earlier in my trading room this morning, it's still too much like a bear flag. In fact, if you look at the futures, the CME futures on Bitcoin, still too much bear flaggy for us to be excited about this.
It looks lovely.
Yeah. And look what's just beneath today's candle. We've got a little CME gap there of between 85 and 84.5. That gap, I think every single CME gap on Bitcoin has been filled to date. So maybe that gap needs to be filled. And I wouldn't be surprised if tomorrow or the next day we just get another spike down to clear out that gap and a move up. Or it might be a proper genuine bear flag. But if this manages to push up higher today, excuse me, and break out of this flag pattern, which it will do if we get another $1,000 or $2,000 higher, then we'll have a parabolic move and not a symmetrical flag pattern. So, yeah.
Awesome. Or what we'll call a leading diagonal. So it kicks off the next move higher.
Yeah. Yeah. Well, I didn't know that term, but now I know it. Thanks. That's a good one. What does that mean? What does it mean?
Yeah, it's just like a five-way formation that kicks off a new move. But after a five-way formation, you'll then get a correction anyway. And then you think you were dealing with a flag pattern because it's very overlapping in nature. It's not like where you have, let's say, first wave up, second wave correction, then that impulsive third wave, what you generally get in strong trending markets. You rather have this sort of what they call a leading diagonal, 5 waves to the upside, which it could also be, but it could also be a flag. So who knows?
Yeah.
I think we'll retake things here by the end of the week and know exactly where we're at.
Yeah. So here's an interesting, just to finish off. See that CME gap over there that took place in November last year? We only just tagged that a few days ago.
Yeah.
So even though we had that massive bounce, we had to clear out that whole gap. That was over a weekend, this move up. We had to start from the top there, clear out that gap. And then we made another little gap to the downside, which we cleared out on this little rally. But also that little tiny further drop, which no one really expected, but it happened, was just to clean up that gap there perfectly, actually, to the tick.
Crazy.
So, but now we've got one beneath us as well, which doesn't bode well for tomorrow's moves.
No. So
yeah,
we'll see when it's going to get filled. That we can't tell.
We can't. No.
Right, James. I think we over our time by 2 minutes. That's not an issue. Next guy's probably prepping on their side. Sorry we didn't have Walter with us today, so hopefully he's all right. Hopefully he's not storming where he's at, which might be the case, but we'll see.
I'm not in Cape Town right now, Richard, or where I live. I'm in Graaff-Reinet. Have you heard of it?
Oh yeah, Graaff-Reinet. Very nice.
Yeah.
So you're all over the show. You're still with your parents, right?
Yeah.
Doing the scenery.
Yeah, and the parent thing is pretty important, but it's also exhausting. So, but it's a duty. Yeah.
Okay. Just talk to them about trading and stuff, and then they'll go to bed early.
Yeah. Yeah. Sure.
All right.
Okay, mate.
All right, James. Have a good one.
See you again.
You too. See you maybe this week again.
See you to the viewers. Bye, viewers. Bye.
Cheers, guys.
Hello, Paul.
Igor, how are you, my friend?
I'm decent.
Yes, I haven't had a chance to properly catch up with whatever's been going on in the world. You got any insights for us to kick off before we wait for Michael? Maybe, I don't know.
Okay, we can wait, Michael, maybe one minute more. Tell me, please, how is the situation in the UK? How are you?
I'm all right. I'm rushed off my feet, honestly. Just everything in crypto is starting to slowly move around. So I've got a lot of people texting me saying, "Is now the time to buy?" And I'm like, "Now's the time to pay attention to everything I've been talking about the last 2 weeks, and then ask me again." You know.
Excellent advice. Excellent advice. Okay, I can give a little bit fundamentals while we're waiting for Michael.
Yeah.
The boring stuff. I can
not boring at all.
I will share a screen a little bit. Okay, yes, we can see right now. So right now we can sell on this calendar for today that the Forex news shows that the European economy is showing signs of improvement, especially in France and Germany, because the France manufacturing PMI rose from the 45.8 to 48.9, indicating stronger industry performance, while its services PMI also improved slightly. Germany's manufacturing PMI increased to 48.3, showing improvements but still below the 50 mark, which signals contraction. The German services PMI, however, dropped from 52.3 to 50.2, nearing contraction territory. And the overall Eurozone manufacturing PMI rose to 48.7, while services PMI dipped slightly to 50.4, suggesting mixed performance. For the UK, manufacturing PMI fell to 44.6, reflecting deeper contraction, but services PMI improved to 53.2, showed growth in that sector. And finally, in the US, manufacturing PMI declined to 49.8, signaling contraction, while services PMI rose to 54.3. So I watched this news whole day, and what I figure out there is that that today was a little bit volatile, Dale, but it's just a little how I describe the day when we have a small breakout when we compare to the Friday. So I think that today we got a false movement, and I will just describe a little bit just for traders. Oh, hi, Michael.
Hey guys.
Yes, hi, Michael. Welcome. Good to see you.
Oh, hello. So I will just describe a little bit just for traders that like to trade Forex. So when you have a PMI or CPA or PPA, for example, usually as a news, you can see sometimes volatility. For example, if you're in a bullish trend and you get some news in this inflation or PMI or something, some that news, it's not highly important news, we can see few hours of false breakout, and then we create some continuation in the same direction. So this thing is repeat itself all the time. I'm watching very often that. So today I try to exploit that. Is everything okay?
Yeah. I don't know. I think we can hear a street somewhere. It's very nice and roomy. It's good.
Excellent, no problem. I just okay. So it's something that is later when I describe maybe my trades and trade setup for today, I will show on the chart. But just want to tell the traders who trade Forex, this is the great thing for all traders to exploit these moments to avoid the trap and try to keep on the track and continue to follow the main trend. So this is the major thing.
That's good advice.
Paul, do you have anything that you can add, especially for the UK, or any news in the UK for today, or something that you know?
Honestly, I am a little bit behind the curve today, but I'm pleased to see. I'm pleased to see a little bit of what was the UK stats again for manufacturing. We're down, aren't we?
Yes, it's a flash services better than expected. Flash manufacturing a little bit worse than expected. Something like that.
So what is that? What so you're going to have to inform me here. So just what's the differences between the two? Essentially, in the impact on the pound.
It's just showing a contraction. This is only that measure for that. Nothing special there. Usually, what I like to watch more than ever is manufacturing, because the industry and manufacturing is a little bit, for me, important for any country. This is very important later for GDP. For example, if we have industrial and manufacturing increase every single month, we can see the GDP increase very, very soon, that because everything is correlated. But like I said, this is I can tell expected results. But the good thing is that market reacts, and we can exploit that in technical trading. So fundamentally, it's not big deal, but it's good because, for example, if you are bearish, you can wait for a bullish move and then to sell, and vice versa. So I will just show you on the chart later how that I exploit every time when I have either CPA, either PPA, either PMI. So I will show you.
No, that'll be helpful, because I think many people, I'll just say to them, like, you need to pay attention to this calendar. I mean, I'm looking at, it looks like I've got some FOMC statements to read later. I haven't seen that from a couple of members. But I say to them, like, you need to be, don't trade if you've got, CPI data coming out or whatever. But they don't quite, they say, okay, so when do I start trading? I mean, when do I resume? I mean, Michael, you got any thoughts on that before Igor shows us his magic?
Yeah, absolutely. So for me, I'm just kind of going through my process here. I literally do not trade red news at all. I'm only entering positions afterwards, right? So, and I'm typically taking trades at the top of the hour. So if I got 8:30 news, I'm good to go at 9 o'clock. So for me, that 30-minute window, maybe 15-minute, if it's, let's say, 8:45 news, I'm good to hop in at 9. But 15, 30-minute kind of segue there, that's totally fine. You don't need to not trade for the rest of the day, right? And trade tomorrow. So, just don't be in the news when there is high impact news, especially NFP or CPI. And then you want to get in after that news has passed, right? Like for me, if there's late news in the day at, let's say, 10 o'clock, but I'm in front of my charts at 8, I'm not taking a trade until after 10. Like I don't get into news at all, trades before news at all. Because even for me, like what used to happen is I'll get into a trade. It's a beautiful setup. I enter it. I'm like, oh, news is only 2 hours away. I should be good to go. I'm not going to get, stopped out or anything. And what happens? It stalls. It sits there. It's almost like they're waiting for that news. And I've taken a lot of losses on those trades that I jumped in before major news. So nowadays, I just be super patient. I won't enter until after the news has passed.
Absolutely.
So Igor, how do we manage this then?
Okay, so I will just show you my setups and my trades for today, just to see the process that I had. So I will just start to go on the chart. Okay. Just to check, do you see? Excellent.
Thank you.
Excellent. So I will just show you the bigger picture. So the last week we had the moment, I think it's in March 17, yes, we started one bearish relative strength trend line. And as you can see, we were bearish, and in Fridays already midnight, we were bearish, and everything was fine. What I knew from the experience, and this is the very good thing, is usually in every 6, 12 hours, sometimes 24 hours, relative strength index is going from 70 to 30, 70 to 30, or going up, down, etc. However, we had something unusual. That unusual thing is we had several days, actually almost whole week, we were on one bearish trend line. And what I wanted to see the breakout of that trend line. When I have a trend line or relative strength index that have several attempts without a success, and in one moment I break that trend line, it's huge. It's the same as you trade trend lines on a live chart, because if you have, for example, 5, 6 times price rejection following the trend and you break that trend, it's huge. So what's happened in the early morning, we had a breakout. The first breakout was something very, very small. I was sleeping then. It was the Asia session. But I realized in the beginning, just before UK session, we made a we broke that trend line. And around the pivot point at 1.2930, I enter into buy trade. That trade is the same time. It's a simple moving average 50, everything aligned. I'm in the rectangle. I broke this several days, 30 minutes relative strength trend line. Everything was fine, and I entered into trade. And I wanted to keep that trade because I wonder, okay, we will track on the main bullish trend because I'm bullish overall on British pound dollar. But what's happened here? I drew Fibonacci retracement from the highest high last week to lowest low last week. And I realized that I just push at the 61.8 level and then rejection. I wait a little bit, 1 hour. And after 1 hour, I realize that this can be dangerous, especially that I see the longer candlestick here. So I decide to, after I can say 20 and something pips, to close my trade. I wanted to see maybe 1.3. I have a larger profit. I have some dreams, of course, usually. But like I said, on the end, I made small profit. I didn't make a loss. Very important for me to avoid any kind of loss. And I closed my trade. And this was it for the European session. However, what's happened, I monitor the news. I see that the US dollar against all these currency pair again is stronger and stronger. That all these euro dollar, British pound dollar, Aussie dollar, everybody, this is going down. And I waited to find some good currency pair and some good setup. And I will show you the beautiful setup. And what I will do, I will go to the line chart. This is the line chart here. And I will show you, this is the euro dollar. Look, this is the beauty. This is I think for the books, So we had a trend line here. And I had a relative strength index 30 minutes trend line. Then we broke this trend line. After we broke trend line, we a little bit go down, and then we touched the trend line. There was a rejection, and we started to go down. The good thing for me, this section here is a 5 pips area. So long time I had opportunity to enter into trade. I think all hour I could just pick any price and make a sell order, and I made sell order at 1.0825, and I put my target just open right now, and just before we start this session, I put to the break even. Actually, I put 5 pips above it, 1.0830. But after this session, I will put on break even, and I will see. I will want to wait to see what will happen here. But like I see, when we watch the market right now, I see the bearish trend, an intraday bearish trend. I believe in this intraday bearish trend, and I want to see some new low. My classification algorithms that I have, they predict the new low today too. So I believe that there is a high probability that we see some new low. Right now, we are on the last week low around 1.08, but I want to wait to see what will happen. I think that there is a chance for a bigger move here. I will back my candlestick again, but I think the line chart is just beautiful for watching right now. So as we can see, the whole last week we were in this range, that range from 1.0815 up to 1.0915, and now we have broken on the 4-hour chart. We've broken this important range, and I believe that we can get further, maybe in this area here. So between 1.07 to 7015, or maybe more, something here. So I'm waiting to see what will happen, of course, but that means that we will have some kind of the push for US dollar too upside if we want to see these levels here. So on the 4-hour chart, we are bearish right now. On the 30-minute chart, we broke the relative strength index. So everything technically on my side, and I will have only one intraday trade, euro dollar. I will not add other trades because it's dangerous. All that trades are very similar, but I pick euro dollar for today. And for other currency pairs that I watch, Aussie dollar, as you can see, I still holding this few week trades. So I didn't close that trade. This is the trend line. Still, we didn't broke that trend line on a daily chart. The trend line or relative strength index is still bullish. So I don't want to change nothing here. I will just monitor. If something happens, I will be break even. So there's no problem for me at all. And the last chart that I'm watching, and it's very interesting, is US dollar Japanese yen. And you will see what is interesting here. As you remember, 2 weeks ago, we broke bearish relative strength index, but we were still in the channel. But today, for the first time, we broke this channel here. And I want to see the end of this day. I want to see daily candle to be above this trend line, or above this channel. And like I said, my idea is price to try to retest this channel and then to make a buy order. So I will wait for that, of course, to see if is it possible or not. And this is the maybe like Paul said, I think last week, maybe or Jannie said to me, maybe it's a smart to have one buy US dollar Japanese trade and one buy Aussie dollar, because it's a hedging. We have a hedge position there, one against dollar and one with the dollar, and both of that trades going in my direction. So that can be very interesting if I manage that, to have two winning positions on the different side. So it will be of the US dollar. So it can be very interesting, and I hope that this week and next days will bring me something beautiful.
Right.
So this is my setups. So do you have any comment on my setups, guys?
Yeah. Can you go back to the line chart? The line chart you showed?
A line chart,
on,
yes. I will just
Euro
go
USD.
there. I will just go on that chart. Yes, this is the that
Great
chart.
This is gorgeous, right? Like how I always say, like that M peak formation, break that area, retest that area, and it drops, right? Same exact setup.
Textbook, like you said, Igor. Textbook.
Yes,
Yeah.
this is. I believe in math again. This is this kind of trade. Yes.
Yeah, this was gorgeous. Like absolutely gorgeous. Perfect setup. This is that setup for me that I say you cannot miss this. Right?
No.
It's almost illegal as a trader to miss this setup.
Yes, beautiful market waits for me. So whole hour the market waits. Igor, no worry, I will wait you 5 pips range. Just enter into trade, and everything was beautiful. Yes,
I think it also tells the importance of changing perspective, because even I have a couple of Bitcoin charts which just use lines just for the sake of using lines, because it gives you a different perspective. You're not muddied by the candles. But if you go back to the USD Japanese one, because speaking of the RSI, this is pretty nice too, and I say it because the RSI predicted front run the move. So you see that breakout of the RSI, the diagonal trend line, right in the middle of the pattern. I mean, that was perfect. Just you could have front run that based on the RSI and being so low to support. So again, that's really good signals coming from that trade, and you could have bought in there, and then you would have already been in profit before the breakout. High risk, obviously, being the first one in the mine, but great setups. We're starting to see some recoveries. This is quite nice.
Yes, good, really good,
beautiful.
And fundamentally, it's good because Japanese economy has some kind of the problems. They have a lot of dovish reports, and it's good when everything aligns here. So weak yen, then we have the recovery for US, and then we just break the channels. So everything aligns, and it's really, really good.
Gorgeous.
Yeah, they are great setups today. You're bringing it. Can I ask you the question though, Igor? You said you believe in maths again. What trade made you lose faith in maths?
I was just joking. I was joking. So there is always
it must have been a bad trade for maths to go out the window.
Yes. It's beautiful. Sometimes there is a trade. Everything is good fundamentally, technically, and you just lose the trade, and you're disappointed. But of course, sometimes it's different. Yes. So you just need to monitor everything, think, and be in the right moment. It's very important sometimes be in the right moment, because sometimes it's just a small period of time, and if you just miss that time, it's dangerous. I remember last week, Jannie has a perfect setup. He was talking about that setup and talking, and in one moment during the session, he missed to enter into trade, and he was watching how that strong movement happens, and it's really fascinating. So of course, sometimes you need to be present.
For sure. Yes. I mentioned last week, I'm like, the market has this special way of knowing when you're not paying attention. It just kind of slides in there.
Yes.
Yeah, well, you said, Igor, when you were asleep, when you first got the RSI breakout, I mean, the effort to get up to your computer, just like, oh, it's just the RSI, I'm going back to bed. But you miss them sometimes.
Yes, yes, it's it. But we need to stick to the process. We need to have several triggers before entering into trade, because if we start to use one indicator and one signal and nothing more, it can be dangerous sometimes. And I had a problem and issues with over trading in the past. So this is something that I need to respect on the longer path. Yes.
Mate, I was in Overtraders Anonymous too. I was going to the meetings.
I was sitting right in the front, guys. I think we all were there.
Yes.
But no, I totally agree with you, Igor. You got to develop some type of process, some system to kind of sift out and filter out those poor trades, right? Because everyone just thinks about being in good trades, and they think that's what, being a profitable trader is. And they totally forget about the other side, right? Yeah. Which is staying out of bad trades as well.
Yeah, for sure. Yeah. And I think with this breakout, just speaking about breakout strategies, you could have front run it. You could have, you're very low to support. You could have bought the breakout of the RSI, but that's just one signal. That's not enough. But if you were looking to buy the breakout of that pattern, then you would look at the RSI, seeing it has broken out earlier, which is giving you a preemptive bullish signal, which if you can, I mean, in crypto, it'd be looking for volume as well, but obviously not here. And then that gives you the confidence to, you're not just buying the breakout, you're buying the breakout on the back of a breakout on the RSI, which is two things which you're using. And I think that's probably the best strategy to, if you're not going to buy the breakout just by itself, but because you've got the RSI breakout, now it's a proposition you can maybe play with.
Right. Yeah, for sure. I don't know if you guys got to this question here, but it looks like we had one. I think maybe it was for probably you, Igor, but it says, what's the role of passive versus aggressive orders in the market structure? Did we get to that question already?
No.
Okay, just to see what's the role of passive versus aggressive orders in market structure. Yes, I monitor these things, I can tell, because there are a lot of indicators that they're trying, especially in volume, to create aggressive or passive orders and to define that. But it's really tricky. It's really tricky for me. I know a lot of indicators based on that, but I started not to believe a lot of in the indicators and all that stuff. For me, when I watch the volume and orders, sometimes I'm just watching. I will just describe that as in music, you have crescendo and decrescendo. So this is something like that. You can see, for example, the volume as the candles, how they just increase in volume very fast, or you can see one candle strong volume and other candle is a weak volume, and this is very, very tricky to try to explain how to react in the market. What I have, it's just a hunch, but very often when we are on support on resistance and we have a passive and aggressive orders there with a huge volume or low volume, what I like to watch and to see is usually low volume. And it's a little bit tricky for some people why I'm waiting for that. Why is that? Because what they want to see is, for example, we are in resistance and we have some doji, for example, and that doji is in low volume. Then what they want to see, the next candle, I want to see to be bearish with high volume and then to enter into trade. I know a lot of traders, they see the doji, I will enter into trade. I like to wait at least one candle. Then I will have a little bigger stop loss area. It will not be 5-6 pips. It will be 15, 20, 25 pips. And in that case, I will somehow protect to go on some false breakout or something like that. So maybe I think that this is my perception of trading. But in the future, I will try to more analyze this problem with passive aggressive orders, order flows, etc. Because I'm still learning this area. I'm not expert still in this field, and I know it's important because in trading we have price, time, and volume. So if we want to be good in technicals, we need to be master of that three things. So I will try to be better in that field. So I hope that WinFam that you got the answer. And I see that we have another question related to US dollar index. I will just show right away, just for the Andrew, just to show the dollar index. As we can see, we were in the range and we broke this range today. And we are a little bit higher right now for the US dollar index, which can be seen on the euro dollar, British pound dollar, Aussie dollar, or US dollar, Japanese yen, on all US dollar Forex pair. We can see that US dollar today is a little bit stronger. So I believe that we are in some kind of the either pullback, retracement from the fall or something. I don't know. Maybe it will be a longer term, short term. we will see. We need to react based on the charts. Right now, the US dollar is stronger than last week, and I will monitor that. So
I mean, we were saying over the last few days though that I think, I mean, a bit of a move upwards in the short term would be quite healthy for the downtrend, I think. So
yes, I would like to see the stronger movements, but we need to. The thing that I a little bit surprised is that how fast we'll go in that, and this can be problematic because if we go like this in this way, the US dollar can be go higher because I think that this is the, I cannot say too fast, but it should not be like this. I want to see the legs, leg, bearish leg, bullish leg, bearish leg. But this is the something that is too slow for US dollar, and I need one more week, and then after that I will have some better insight what will happen with US dollar, because this consolidation and this movement right now is a little bit suspicious for me. So maybe it was the opposite opinion. Maybe this was just a short-term correction from the December and January, and now we again go with a higher dollar. So
this is the problem with, yeah, I mean, this is the problem with inorganic price movement, where we're having shock movements.
Yeah,
it's very difficult to, because you don't want it. I want the dollar for my assets to come down, but I don't want it to come down like a stone, right? I want it to just flow gently down a sweeping stream. That's what I want, because then we can trade off it. But this is like this. I mean, this you could call is the bounce, but it's like, you know, as you said, we're now in a macro uptrend. So what are we doing? And this is why we just want a little bit of calm, and just to see where things are supposed to be. Is the dollar supposed to be here? Is it supposed to be higher? Is it supposed to be lower? I mean, we don't know, because it's all a bit chaotic.
Yeah, you're right, Paul, because sometimes when I think the institutional traders, they have positional trades. They do not like to have consolidation so many days, and they like when they have a strong movements opposite than us. They like a strong movements because they can in 1 month to make a huge bonuses, to make a huge trades, because they keep some trades several months, and in 1 month they have 80% of the movements, and in 1 week. And for them it's beautiful, but for us, we don't have what to trade when we have so crazy volatile trends in some moments, and we cannot find the setups right away. And this is the problem for us that trade on intraday levels.
Great explanation. You're on fire. You're on fire today.
Love it. Yeah. So I say love it. Love it, love it, love it. Sweet. I got some good stuff. Yeah, I got some good stuff today. Let me grab this screen. So not too much action on GU or GJ for me today. I'll show that first, but I do have a pretty good one that I'm actually still in right now. I'm already at break even, up pretty big, and this was on gold. Smash gold today, guys. Like, crush this thing. My signature setup, but we'll get to that in a second. I want to go over GU really quick. Yeah. Just love when that happens.
The wins.
Yeah, love when that happens. All right, so this was the same thing that I kind of went over last week, guys. Remember, I'm trading the market maker structure, right? So just kind of always looking for this pattern, no matter what, so I can ask myself and understand where I am in this cycle, right? I always like to start out with, I'm staying away from this zone here, which is the peak, and I'm staying away from this zone here, which is the peak low, right? So not interested in neither one of one of these whatsoever, right? I am only interested in these two levels here, right? And I'm pointing this out like I always do, but this is just going to show the sweet spot once again on gold and why this was a perfect setup to take, right? So as always, this is my level 1. This is my level 2, right? A little kind of a short arrow. Okay, cool. So let me just put that in here. Level 1, right? And then level 2. I'm only trading level 1 and level 2. I'm not interested in the peak low or the peak high at all, right? So only in these two. Now, you guys can probably see this pretty clearly. Yes. We got this funky M structure here. It's pretty funky, right? But one thing that I do not like about this is once I'm confident in the ride to the 200 EMA, which is the white one, after the 1350 has crossed, right? So as soon as this 1350 crosses right there, I'll just type this up too, 1350 cross. This is what I'm interested in. Okay, I want price to run, but I don't want it to touch the 200, how it did here, right? These two little pings, just for this little bit, I'm not interested anymore, right? Because I want to ride price to the 200 EMA the first time, not the second time, right? So this for me is dead, right? The level 1, my level 1 setup, which would be here, I'm not interested in it because this has already touched the 200 EMA, right? The next thing I'll be looking for in this setup, which has not happened yet, or is about to happen, is this 50 and the 200s across, right? Which is the blue one and the white EMAs. Then I want to see price come down and make some type of M structure like this and then drop. Then I'll be interested in this move here, because at that point, that will be my level 2, right? So once I have this 5200 cross, 5200 cross, right? Now I'm interested in this, but this is not happening yet. Obviously, still got plenty of time for this to go. This might not happen until Tuesday, Wednesday, Thursday. Who knows? This might not ever happen, right? But I'm just building a case of what I'm actually looking for, right? So this would be my level 1. Not interested in it because I already hit the 200. My next one, this is what I'm looking for, 5200 to cross and give me some type of M structure off of this level and level 2. I'll be interested in that move. Once it goes further than that, that's my peak. I'm not looking at this pair anymore. It needs to turn around or reset and continue the same type of movement, right? So G was nothing. G was dead. Once this happened last week, I mean, I look at this just to kind of see where it's at, but for the most part, I'm not interested in this pair whatsoever. So that was my quick markup on GU. And then GJ was pretty much the same thing. Oh, we actually still have this on here from last week. Funny enough. Right. So if you guys remember this, actually, I'm going to delete all of this just to kind of start over. Right. So GJ kind of did something similar, but the other way. Right. Now we see we got this 5200 cross here. And as I mentioned just a moment ago, once the 5200 crosses, I'm in level 2, right? Level 2, and I'm looking for M or W's off the 200 EMA, right? So as soon as this happens, the very next thing I'm looking for is price to actually touch the 200 EMA. And as you can see, it did it here, right? So we got this funky, kind of funky structure here, right? This little W move and close above, right? Soon as this closed above this 13 EMA, which is the entry signal, that's when I will be interested in taking this trade, going long, because my chart is telling me, okay, things are adding up here. Now on the TDI, which is at the bottom, what I'm looking for is this nice reload, which we have, right? So we got this market baseline crossing below the static here. And then we got below the static, that is, and then we got it crossing back up here. All of this space in this middle part right here, where the yellow line is below the static line, this is my reload. My M's and W's off the 200, they need a reload, right? If there's no reload, there's no trade, right? So I'll just kind of put that in there. For me, this is, once this happens, this type of action happens, market makers are deducing traders to go shorts, and they're trapping them short, right? There's orders going short below this 200 EMA, all below this. So they got to come in, do some little funky business to induce traders to put their order on going short. Because there's traders here who have pending orders going short, and then there's traders who are aggressive, right? And they're just shorting this as soon as price breaks below this 200. So what does the market makers do? They got to play with you, right? So they activate the order short to get those traders to jump in short. Then they yank it back because there's also traders going long, right, above this 50 EMA, right? So you got traders trapped on both sides. And then what do? They yank it back down again. So the traders that went long, they're probably stopped out, right? And then the traders who were short, they either let go of their position, took a small loss, or they jumped back in going short. And then the finish him move is to pull the whole thing away from them entirely, guys. This is a nasty, nasty type of cycle, nasty behavior, but this happens all day, every day. So when I see this type of movement off the 200 EMA and in this exact style, right, which is again on the long side, right, this type of structure here, right? This is the holy thing right here. Right? So we only interested in these two particular scenarios. That one and this one going long, right? This one is actually what we're looking at now, since it's a W, is this, right? Because remember, once the 5,200 crosses, we're in level 2. Right? So once the 5,200, oh, whoops. 5,200 cross, level 2, right? So we are here in the cycle. As I always ask myself, where am I in this exact cycle? As soon as I see this 5,200 cross, I automatically know I'm in level 2. So I'm looking for W's or M's off the 200. In this case, W's, right? Now, this particular one for me, even though this was a great setup, this actually confirmed yesterday. Was this yesterday? Yeah, on a Sunday, right? I don't trade on Sundays. So for me, this was a great setup overall, but they snuck this in. They literally confirmed like right when the market opened on Sunday. That's a no trade for me. I don't trade Sundays at all. Even if a beautiful pattern were to set up like this. Right now, this did end up going, as we can see, but this could have easily went the other way because it was Sunday, right? Not only was it Sunday, this actually set up in Asia. So if I was ever not going to take a trade, it's in Asia on Sunday, right? So really wasn't interested in this movement here at all. Okay, and then so this was my markup for GJ. So not hideous or not ugly at all. It was actually very pretty. The only thing that was wrong with this was, again, this happened on Sunday. My confirmation candle would have been literally right when price closed above the 13 EMA, which is right here, right? And again, this was Sunday at 6 o'clock, right when the market opened, basically. So this was a pass for me. Pretty, but it's a pass.
Yes.
Cool. So that's GJ, and then let's get into gold. All right, let's get into gold. Gold was freaking phenomenal today. I literally love this. Is my favorite setup because it's coming out of level 1. I can easily see this, and for me, as long as everything sets up the right way, I'm all over this bad boy, right? So we got this same market maker structure, break, retest, and then we hitting lows. All right, as always. Keep bringing this up because this pattern should be ingrained in your brain if you're taking these type of setups, right? As usual, I'm only interested in these two. And look what we have here. Just beautiful. Just beautiful to say the least. All right, we got this M structure here, right? Now remind you, remember I said on GU, when we have the M structure and it runs down, I don't want it to touch the 200, right? Which this one didn't, it missed it, right? And then I want to see that first pullback to the 50 EMA and drop. This is what I call my master trade. This is my highest probability setup that I have. And this just works out for me very well. And the cool thing about this is again, it's right in level 1, right? We got the 1350 cross, right? As you can see, price, the 5200 cross has not happened yet, but the next step in the cycle would be for the 5200 to cross, and then I'm looking for M's off of that level there. But before that, it's my level 1 trade, which again is right here. Same thing. These are literally the same exact thing in this cycle, right? We got the 1350 cross. I'm in level 1, right? And then the same thing here once again, right? Once this 1350 crosses, we are in level 1. So I'm looking to exploit this move to its fullest, right? So yeah, this was my beautiful trade today. Love this setup. And simultaneously, guys, on the TDI, what I want to see is the market baseline to go below the static line here. So it did cross below. I know I'm definitely short at this point. And then also in conjunction with this, I'm looking for the RSI line and the signal line, which are these two lines here, the purple one and the pink one, to be above the market baseline, right? Because I'm expecting it to go below and come up. And in essence, once this is happening, this is the same move. This is the run that's missing the 200, and this is the pullback to the 50, right? And then from there, I'm expecting it to drop. I want to be with price as it's coming out of this level, this peak high, 1350 cross, run that misses the 200, pull back to the first pullback to the 50. Once price closes below the 13 EMA here, I'm all over it. I'm all over this setup. And I'm banking that I want to be with the train, with the market makers, with the major institutions on this ride short, going towards the 200. And yeah, it's kind of what you pointed out earlier today, Igor. This is textbook. Like, this is a textbook setup that I would take any day of the week except Sunday.
You can have your laptop in church. It's fine.
Right. Like, this is gorgy. This is the same exact setup, right? And then once again, just to kind of close it on out here, like, right, once this actually goes down, then we're looking for, this is when this, I'll say the 5200 across at this point, right? And then at that point, now I'm looking for M's off of this level here, going back short. And that will be my level 2.
One question, where you put the stop loss for all these trades, do you have some special system for that, especially for gold?
Yep, always above the most recent swing. So in this particular case, how this swing here, this is like the highest point. Let me scoot this over just a little bit. Actually, let me take all of this off because it's kind of cloudy now. Yeah, this wick here, this is my highest swing point. I want to put my stop loss above that. So I want to put my stop loss above this, right? Typically 2 to 3 pips above it is fine, right? And then I want to enter the trade once this closes below, right? And as long as the distance from here to here towards the 200 EMA, right? As long as this is equally a 1-for-1 minimum, I'm fine with it. Excellent. The more the better, obviously, but I want this to at least be a 1-for-1. And in this case, as you see, it was 1 for 1.3.
And what is your experience, especially for gold? It's volatile sometimes. Do you have some kind to be wash up, you know, when price just to break against your stop loss and again going down or something like that? Do you have problem with that in the past or something because of the volatility of gold?
Yeah. So for me, these top four pairs, right? So on my NASDAQ 100, US 30, S&P, gold, man, these things move fast. Like on these days when I take these setups, I'm in front of my screen. Like I'm not gonna step away. I'm on super on point with this pair. Now, the only extra thing is this is my highest probability setup. So it does give me that much more comfort that, hey, this should technically work perfectly fine. But of course, I still get stopped out. They still wick me out sometimes, right? Like they might do something crazy. They could have just came here and did something like this and then dropped. Yeah, in that scenario, they got me. They just got me for the day. But yeah, I totally agree. This pair is super volatile. I don't trade more than like 1% on my most pairs anyway. On this particular setup, since this is my master trade, my highest probability setup, max is 1%. So if I do get hit, I mean, I lost 1% on it. It's not too big of a deal for me. But yeah, I'm typically setting alerts too, right? So I'll end up doing something like this. Like, let's say if my stop loss is here, I'll have an alert here that says, I kind of do like 4 alerts, which is kind of a lot, but I'll do something like this. I'll put hit SL. Once it's close, like let's say price got all the way up here, right? I might put another alert here and I'll put it in and I'll say, you know, close to SL, right? So that's on I'll say the bad side. The good side will be something like right here, right? I'll put SL to BE, right? So at this point, I'm taking moving my stop loss to break even, typically taking off half of it as well. And then finally at this last point, typically about right here, I will just put an alert here too and just put hit TP. So in addition to me, for one, I'm basically sitting here. I don't like with currency pairs. Like once I take the trade, I can do what I want to do. Like I have my alert set up, something similar to this. And I don't mind like stepping away for a few moments, but with those top 4, gold included, yeah, I'm not, if I do step away, it's no more than like 5 minutes because I want to make sure I'm watching this, you know. I don't want anything crazy happening going against me, but these alerts help me out tremendously too. Just kind of like lets me know like, hey, you know, I can tell exactly where I am as far as managing the position.
Yeah.
So
yeah, alerts are well, it's a style thing, but I have a system where essentially it took me a while to figure out how to do it, but essentially I got TradingView wired into my Amazon Alexa, and I create custom routines. So if it's a support buy, it'll be, you know, Paul, please attend to your laptop. There is a potential trading opportunity at a support
that's
buy.
nice.
Yeah, but it gets annoying because because what I would do also when I was in like you, Michael, when I was in South America, I had all hue bulbs and hue lights. So I had a whole smart home, right? So the lights would turn green when it was take profit, right? You know,
Wow.
So I would wake up in the middle of the night to blazing green light, and then my Alexa shouting at me, please return to your laptop. And I'm like, oh, so alerts are good, people, but don't do what I did and go over the top because it just gets
Yeah, that sounds super cool in the beginning. I bet it was until like, you know what, this is not cool anymore.
in the beginning, but yeah, it wore thin for sure.
Yeah, nice. But yeah, I'm a huge alerts fan. Like they come to my Apple Watch, the whole thing, and I typically always put like a little note in here so I can just kind of know exactly. You know, it's kind of like me being in front of the screen without me having to actually be in front of the screen. But yeah, it does get annoying sometimes when they hit a level it hasn't moved. I got to put the alert back on there. It hit the level again, still hasn't moved. I'm like, oh my God, like, can you just please move or get out the way? One of the two. So I got to keep putting this price alert on here.
Yeah.
But yeah, guys, this was my setup for today. Absolutely gorgy. This type of setup on a Monday will set up my entire week. Right. So love it. Love it. Love it.
That's great.
Did either one of you guys have any questions about this?
I think you've been very, very thorough. I think we're having a storming Monday session today.
Sweet. In my opinion, next will touch. Okay, G just pulled back the. Okay. Yeah, I'm really not looking at GU until it continues to. Until it actually does the 5,200 cross for me, and then kind of come back. Right. I want to see something real on here, because right now it's just kind of in this. It already hit this exact point that I would have wanted to take it to, right? And it's definitely running now. And what will happen is this 1350 will definitely cross. So I want to see this. I'm sorry, 5,200 will definitely cross. I want to see this pull on down, then pull back up and make some type of M structure, and then continue to go short. I wouldn't be interested in it at all until it does that. And simultaneously, what will happen is this market baseline will go back above the static, right, and create that reload, and then it'll come back down. So I would need both of those things to happen for me to take it, right? Then come back up, make some type of M structure here. My stop will be above here, entry here. You know, TP will be probably around that most recent low. But I would need both of those to happen together for me to be interested in GU again.
Yeah.
Yeah, that is pretty much it for me. I did want to touch earlier on that question really quick, which was about like what's the role in passive versus aggressive orders in the market. Just like you say, Igor, I believe it's pretty difficult to gauge that. There's definitely a lot of screen time with that. It's definitely a lot of understanding that needs to go in with that. But one thing is also that I like to kind of do is kind of label them as aggressive is a market order, right? Like automatically it's someone who's entering the market right away. A passive trader would be a pending order.
Yeah.
Take it versus
so I like to think of those two as the difference.
Yeah, for sure. Yeah, it's a really deep question. It's a fantastic question. Like we could talk about that for ages, and I need to do some research also. In truth. Right.
I'm sorry. Well, yeah, let's look at Bitcoin for you, Paul, and then you can go through it, and then I want to share again if that's cool, Igor, because we spoke about it last week about what I was looking for. Me, you, and Jannie. Right at the end, I kind of showed what I was looking for on Bitcoin, and it did it. So after you go, I want to kind of show that too.
Yes, please.
Oh yeah, you got a chart now? Do you want to look at it now?
Yeah. So I can actually just show it now.
All right, I'll take over in a minute. It's fine. It's chill Monday.
Sweet. Okay. Cool. So if you remember, you, me, and Jannie were talking about Bitcoin and what we were looking for, because I think he mentioned it kind of jumping back down to like 71. And then we were both saying how it kind of just recently got to this point of that it could kind of start going to the other side. So if I kick this up to the 4-hour chart, I think we were talking about it here. For me, as I always mention, the market baseline, which is down here, the yellow on my TDI, as long as it's below this static 50 line, this is short. Like this is short for me all day long. I would never be interested in trades long until the market baseline went back above how it just did, right? So before this, you see it literally just crossed it like back here, which was basically, right, February 2nd. Right. So literally almost 2 months ago, this thing had just been down. Right. This is close. Like it tried to really go for it, but realistically, this didn't go above it. It kind of just touched it. Right. Same here. This is close, but it didn't do anything. It didn't touch it. It just was close to it. But we finally got this thing to actually go above now. So now at this point, now I'm kind of looking at, okay, Bitcoin might have just flipped and it could possibly be long at this point, right? And this is just on the higher time frame. I just kind of look at this, since this is a much, I would say, holding this much longer than just like day trading it, right? So I'm looking at this on the 4-hour chart, but I wouldn't execute trades off of here. So coming back down to the one.
I mean, there's things to execute, but you're right. We're not quite. I mean, we'll look at charts in a minute, but we're not quite there. But it's really interesting looking at it from this perspective.
Yep. Because it's basically just now getting there. Like it's been down for so long. It's kind of like a portfolio, right? Like your portfolio has been, let's say, in the negatives for 2 months, and you finally get back to break even. It's at that point now. It's just now getting back to break even, pretty much.
Yeah. I mean, MicroStrategy purchased between March and 17th and the 23rd, which is yesterday, almost 7,000 Bitcoins, just the last few days, of an average price of around 84K, which is kind of the area we're in. And just for reference, if we're trying to, obviously, the biggest question any crypto trader has is, is the bottom in? And we can't answer that just yet, but only 3,600 Bitcoin were mined during that time. So 7,000 were bought, but only 3,600 were created, which is almost double in terms of supply and demand. So there's there's data behind it too.
Yeah. And that's a great point, right? It's like, that's definitely interest for sure. It's definitely interest there. Like from a supply and demand aspect, yeah. 7,000 at about 84. I just did the math. That's $588 million that they just did.
Yeah. You're spot on. Good math.
Yeah.
Yeah. I have to say it. You said it.
But really quick, then I'll give it to you, right? So as always, remember my structure here, right? I always love to draw. Right. So again, once I have my 5,200 cross, which is right here, I'm looking for W's off the 200 going long. And lo and behold, that's exactly what we have. Nice, funny W structure going long, right? I wouldn't have taken this, but if you did, this wouldn't have been bad. Stops would have been below that most recent swing. Once price closed above the 13, you can be in it. And as I mentioned, you have the reload here. It's really short, but price definitely went, the market baseline definitely went below the static and came back up. So this was actually a very, very nice move on Bitcoin if you were to actually take this. So just to kind of zoom in a bit. Yeah, that entry candle, this one doesn't count because it's not, even though it's above the 13 EMA, you want it to close above the 50 as well, right? Because this could have easily bounced off of here and made another leg. So I wouldn't have been interested in that at all. I would have ended up having to take it all the way up here. Once we got a clear close, this is a beautiful shift candle. It closed above all of this, and it basically closed above all this structure here as well, right? Yeah. So, and if you would have grabbed it here, put your stop below this recent swing, right? And let's say you were just targeting the 80-yard high. Nice 1 for 1.5, basically. This is a nice short trade on Bitcoin going long.
Yeah.
With my exact setup, number 4, W off the 200.
It's great.
Right. So super cool. I just wanted to go over that really quick because I know we were talking about it on Friday.
No, this is the thing. It's like these sessions, they, we have our own viewpoint, our own perspective, and it's so great to see other people from other spaces because it gives everybody who's paying attention a well-rounded coverage. So we need to absolutely keep doing it, because if I'm the only one talking about Bitcoin, then you're only listening to my viewpoint. And even though I might have an expansive viewpoint, speak of the alerts.
Exactly. I was going to say, there go those fancy alerts here, right?
Yeah. So yeah, it's fantastic. Let's have a chill check-in. It's just Monday. We need to see what really happens tomorrow, but let's see where things are from that perspective we were just talking about. My perspective. So can you see this chart from Friday? Can you see it okay?
Yes.
Yeah, it just came up.
So yeah, I mean, I didn't. We were talking about to Jannie about this, and I don't want to be that guy, because this, until we break above this 618 and we've got resistance overhead, Jannie could be spot on, right? You know, we could continue lower. We're still in the pattern, remember, which has a bearish bias, but yeah, strong move, second high. We were tussling with this moving average I was watching over the weekend, strong. And because we've really broken out above the 0.5, you know, I mean, there's a good few scenarios we can trade off. We've got the most likely scenario, which would be maybe hanging around this range. We've obviously got, I mean, if we break to the upside out of this pattern, it's probably coming up here, because against probabilities, Bitcoin tends to go parabolic. So that's an option, not likely. Or we could just get a rejection here and lose it and then come down. But that's the context which I'm not 100% supportive of at the moment. But as we were talking about last week, we need a new chart because it's a new day. So here's Bitcoin 12-hour, because we need to make sense. And this gives us some ideas of where we are. We're just breaking out of this pattern with resistance overhead. So again, it promotes the idea that we might have a bit of ranging activity, perhaps, maybe, until we can move up. But if we get across this level, we break back up to this, then it's game time. And that's what the bulls are really waiting to see. But we've got a line in the sand. We are creeping ahead out, but never forget, right? When you're looking at these patterns, just remember, we are still in a downtrend, right? We are still in a downtrend. And these bullish signals we're getting from the break of the 200 MA, they are significant. But will they have enough follow through, as Igor was saying at the start, to move us upwards? So, you know, interesting to see what happens. And let's have a look at the 2-hour. Again, we've got this, you know, this bullish breakout of this symmetrical triangle. And the measured move of that, based on the triangle, is kind of up here, which is 102, which is back in the game territory from this pattern. Now, I don't think we're going to see that right straight away, but we've broken above local support. We're above the point of control on this chart. It's very clean, purposefully. So coming up to here would be fantastic. And if we do that, we're back in this range, right? We're back above. And that's what we're trying to, that's where we want it to be. And then if we do that, the money flow, which is now a fresh chart, is Bitcoin dominance. Even though we've got this this pattern which has well, it's a bullish bias, but remember, with Bitcoin dominance, a bullish bias is bearish for the altcoin market. This goes up, it hits the altcoin market. So we want to see a breakdown of this as well. And whether we do, which direction this goes in, which is good for altcoin trading, good for altcoin trading, bad for altcoin trading, will depend on what Bitcoin does next. And if we can get up here, then it's game time. But still a little bit of work to do. Not entirely convinced. I do share Jannie's viewpoint that, you know, there's a lot of work we have to do before we get up there. So it's going to be interesting. Thoughts, guys, from looking at these charts perspective?
Yeah, I say the same thing. Like, that's what I was mentioning, right? Like, I'm not shorting Bitcoin personally because the bias on it is just so long. Everybody thinks it's going to $1 gazillion. So I don't want to touch something that people fundamentally think is going to go so much higher. But yeah, Jannie is spot on as far as we're definitely still in the downtrend. This thing could definitely keep going short. And yeah, just how I've mentioned that trade that I was just mentioning. Yep. Yep. The trade that I was just mentioning. If you are buying that, yeah, make sure it's a day trade. Don't try to swing onto it and say, oh, the bottom's in, it's going long now. No. We are still in the downtrend. It's just now getting to that point where it just doesn't look as down as it was before, right? Like, we got Liz kind of just now peeking his head above that certain area, right? Which, again, he can still just totally go back the other way.
I mean, that's a trade. That's a trade right now, right? Respecting the fact that we haven't won this level yet, right? Wait for it to come down, buy in this pocket with the moving average coming in. This is the 1 day on the 12-hour. Buy it, take your profits. That's it. There's a potential trade. I mean, you know, we come up here And obviously there's a short opportunity, but what is the confluence? We don't quite have it other than just a lot of sellers. So yeah, this is probably the range we might want to be in. It'd be interesting to see what happens. But if we come straight up here, I mean, that's great. I mean, those are the scenarios. So most likely, you know, a bit of this, maybe. Ideal, take this level back, and then we can attack all-time highs. That would be great. The bearish scenario I'm not seeing right now because we've got these pockets protecting us. So to get through, we'd have to with the buyers on this pattern still trying to front run the retest. So, you know, it's turning. And likewise, again, you know, if you've got the point of control, you could buy the retest of that. You know, if you want a bit of bearish downside, or you've got this local. So there's starting to be a few options for some small short-term long trades for Bitcoin. Maybe stay away from shorts until we have a bearish signal now. Igor,
yeah.
Igor, your thoughts?
I think that this chart is very similar to my US dollar Japanese yen. So we are bearish channel. We are in some mode that we can break it, but it's too early to make conclusions, something like that. Yeah. I don't think we're at the second glance across the bar yet, but maybe soon. Just see what Ethereum's doing, because obviously, see, here we go. This is what we're talking about, right? I said to you last week that if Bitcoin keeps on with its bullish moves, Ethereum is going to recover, and we're now doing that, and still in a downtrend. Let's just be clear. But look, talking about the RSI at the start, right? Here it is, right? This is your front running signal out retest. Yep. You're going now, right? So you're looking at this. You're looking at Ethereum. You know, this is the line in the sand on the RSI to watch, essentially. We want to break above that, right? You can use this. You can use the RSI for patterns for sure. And then again, obviously on the levels with, if this is front running the price action a little bit, then maybe, you know, we could see, we want this level. We want this to come up, right? We don't need it to hold, but we need it to come up. We need to maybe up here, surpass this high, and then people will start looking for entries. They'll start scaling in. They'll, you know, positive bullish movement will occur. And then, as we were talking about again with the money flow, once Ethereum starts making its way up here, even if Bitcoin's just sitting pretty, that's fantastic for the market, because that means then Ethereum is outpacing the Bitcoin, which is the first move we're looking for before we start getting some love to the other altcoins, and that kind of money flow cascades. And struggling to, I don't want to repeat what's happening on Friday with that long-term chart, but there it is. So we're waiting for this. And if Ethereum can recover and Ethereum can get back to those higher levels, then we should start to see the money flow cascade. And then that will allow us to have lots of good bull run altcoin trading, but it hasn't happened yet, and that's what we're waiting for. Yeah, I mean, you can see, look, here you go, here's Litecoin, which we've been looking at. Such a mess. You can see I haven't looked at this. Litecoin again putting in a higher high now, following the breakdown to this range. First bullish signal we've had in a while. Still got resistance, but this is what it's doing. Yeah, that's where we are on Monday. So that's me, really. That's me.
Yeah, definitely in some modes where we just gotta hurry up and wait and see with some of these pairs.
Yeah, well, it's like what I was telling my students, that like, so when you start getting conditions like this, you start thinking about not taking profits at target 1, which would be the next resistance line above whatever the price action is doing in any coin or token. Now we're entering the territory when we've got a lot of altcoins breaking out of long-term, kind of bottoming out, breaking out of long-term downtrends, not sufficiently bullish signals for everyone to jump in straight away, right? Because we just, you know, price action pokes its head about, we could still roll down, right? We still need to see a few more moves. But I tell them now that, okay, so if we get another bullish signal, if Bitcoin breaks into that upper range, then you can start setting your take profit price points for the second target for like medium term trades because the conditions are are changing. And that will allow you then to maximize your profits because there's less risk, less uncertainty, and you can let things run a little bit. I mean, you can still have a plan. You still exit if you get bearish signals, whatever. But this is the game, and it's the slow movement. And then your strategy, though, has to change with it, right?
Mm-hmm.
And I mean, you guys tell me what you think about this. So when I was learning to trade, and I still to a degree, the biggest problem I had was being able to see the next move coming in terms of the next market sentiment coming. So when things are a little bit more rosy or a little bit more bearish, and then to be able to be ready with my next strategy for that next phase. And I always felt like once I saw it, the market had then moved to the next phase again. Right?
Yeah, it's that classic moving the goalpost thing going on there, right? Like, you feel like they're cheating at some point, right? Even for me, like how, as you guys can see, how I mentioned, I'm only interested in level 1 and level 2. If I'm in peak high and I see my 1350 cross, in essence, I can see the next setup that I want to take, which is that first level 1 trade going short, right? But if it doesn't happen that way, and if something else happens, you're just kind of waiting. But yes, it's always a game to make sure you're ready, right? Because I always like to think that if you get enough experience, enough chart time, that helps you, and do homework, of course, that helps you see what happened in the past. Like, okay, I can see this in the past. I see it. That's like step 1. The next step would be to be able to see it like almost when it's happening, like in the moment, right? Like, oh, it's happening. I haven't lost it. It's happening right now. But that ultimate phase is to be able to see into the future, almost to say, hey, I know what the past looks like. I know what right now looks like. And I can kind of surface it out and say, hey, if this happens, then I'm going to do that. That's that ultimate version of having the foresight to really be ready to put on your positions at that point. Because then it gives you that confidence, right? Like, hey, I said if it does A, B, C, and D, I'm going to take the trade, and it's done A, B, C, and it's about to do D, right? Soon as D confirms, if you don't take the trade, like, what are you doing? It seems like you're scared. Now you're back to emotions, right? So it's a constant battle there of, oh, wait, am I sure this is right? You said A, B, C, and D. It's done A, B, C, and D. Put the trade on, right? Yeah. I tell students all the time, when all this happens and the setup appears, trade without fear. Like, don't be scared. You've done your work. You've done your part. Now you got to put your position on and let the markets do its part.
Yeah. I mean, it's like, so you have to find a way to quantify and assess, what's coming. Like storm chasers, right? You need to be able to stare at the sky and know what's about to happen. But it's not necessarily, it has to be an instinctive thing. So we looked at Bitcoin dominance, and it's like, this is something we can trade off. If we break higher, this is short bias, right? In terms of it's bearish, right? For the altcoin market, right? We know that, right? This isn't great for the altcoin market. This move, right? This isn't great. But we know that if it breaks down here, as it started to, we know the weather is beginning to change. So people say, like, why do you do so many charts every single day? And I'm like, because I am trying to get this information, because it doesn't matter what I'm looking at on Litecoin or Ethereum. None of that matters if I'm not paying attention to what is the weather going to be tomorrow or later in the week. Trade isn't going to play out the way I want it to, or I'll just get lucky. And that's not essentially how we trade. I mean, Igor, what's your with regard to seeing what's around the corner?
Yes. I'm thinking a lot about not just Bitcoin, about whole market. Actually, right now, I'm watching the comments, and we skipped comments from Selka Crypto. She's asking about S&P, and do you think the S&P will fill the gap? And I got some thoughts about this. First, the Richard, the Sam, the Jannie, and they're experts for S&P 500 and futures and indices and everything. I'm not expert for this, but I just want to just all this story that we talk about trading generally, that we create some experience. For example, we create several setups and maybe we will activate one or two of them. We'll never activate all of our setups or charts and tools that we have, but it's good to generate ideas. And relating to S&P right now, can I maybe just to show S&P, because I just want to answer on this question and at the same time talk about trading. For example, I'm not the expert in S&P. I do not trade a lot of time this kind of market. But in the past, I worked for some proprietary companies in US. They trade equities and they trade S&P, etc. And I will never forget this. They know what retail traders do, and they try to do opposite because they think that they're losing all the time. So one of the things that I remember, this is the answer for Selka Crypto. I do not feel that S&P 500 will fill this gap. So I think that we will have continuation of this trend, just pure technically. But I will just tell you, I'm doing this in the past. I created some experiments with this, with gaps. So when you see the gaps in the stock market or indices market, there are two ways of trading. First, institutional traders, they want to buy. If we see this kind of the gap that we have a upper move, they want to buy. They don't want to sell to fill the gap. So what they will do, they will enter in the trade right at the moment, or what they will do, they will check the previous period. For example, it's a range market. What they will do, they will calculate usually 30% somewhere here, make an order here, wait for this order, and enter into the trade.
Oh, sorry, guys.
No problem. No problem. This is the order.
Those darn alerts.
Yeah.
It is live trading, folks.
My bad. Go ahead, Igor.
No problem. And I learned from them. They know that a lot of traders enter to fill the gap. So they want to make a sell orders to fill the gap. So what they do, they're either wait for pullback, enter into the trade, or they will just make this continuation of the trade. But I want to tell that in these sessions, I see that all traders, we have a similar way of thinking, that we are always waiting for pullbacks. We want not to buy on the wrong moment, in the wrong price level. We want to market comes to us. We want to price level to come to our level. Like Michael has L1, L2, like Paul has his way of thinking and levels that waiting for the price, like me or everyone. So we are waiting for price to come to us. In this situation, for example, S&P 500, there is a big chance that we will not fill the gap. Even if we fill the gap, the better strategy is to buy after the pullback, just here maybe in this price level, and put the stop loss just below this range and wait the market is going up. So this is what I will do in this situation. So what I want to say is it's very important to be patient, and patience is really the most important thing in trading. And I think that I waited several years to figure out that, and even that I was reading that in the first year, but I didn't want to believe in that, how patience is very important, and how all these charts analysis is very important, to wait, to be patient, and execute trade in some moment.
Yeah. That was great stuff. Just to kind of tag onto it, I think a lot of traders, I think there's this information out there that like, oh, when you see a gap on the charts, it's like an 80% chance it's going to fill the gap or something like that. And it's like one scenario going on. That's almost like having one like scenario that needs to happen before you enter the trade. just like you, Igor, that's not enough. That's not sufficient enough to try to short this. So if you're thinking of, want us to say it can fill the gap, so you short it and you fill the gap, that is not good enough. You need much more confluence than that. It's a lot wrong with that. So it's a lot wrong with that. And then too, right? Even if you were to do that, like where would you even put your stop at? And then would you be risking more than you would gain? Right? It's too much going on with that.
You use the fair value gap as a measure of confluence in terms of it's an additional thing you take into consideration.
Yes.
There's another question. Thank you for the questions. This is good. We can end on this. How can I develop discipline and patience in trading? Well, I can have a crack at that, and then you guys can tear me apart afterwards. I think, look, we could go on about have a plan for all eventualities. We could go on for that for ages. But I think what I've mentioned earlier, and we've all been talking about, is when market, you have to firstly know what you're trading. If you know you're in uncertain conditions, you have to adapt, as we were just talking about. So how can you develop discipline? Firstly, understand that whenever you're going to trade, look, you need to essentially do the metaphorical look out the window and see what the weather is. And then that will associate itself with a way you approach the market. We talked about like uncertain conditions. You take profits, on the first target as an example, quick in and out trades. But you want to be looking at the market like this. You want to be thinking that 4 out of 5 of the assets or pairs that you're looking to trade off, 4 out of 5 of them aren't going to fulfill your criteria, right? You just have to accept that, right? You're doing the planning, you're putting the time in, but it doesn't fulfill your criteria. However, one of them will, and those are the ones you're looking for. Those are the ones you are waiting for. Those are the ones you need to be patient for. So it's really a case of understand what you need to enter a trade that makes sure you're profitable and that you get a good success rate or whatever that works for your system. And then just stick to it. I think we can all attest to, I've only ever lost money when I've not followed my plan or not developed a plan. And if you can do that, the patience and discipline will come.
Yeah, well said. And just to kind of tag on to it, take a keen notice of how many times you don't follow your plan and lose, and how much if you would have stuck to your plan, if you would have won. Just pay attention to that part, because that's going to help you with discipline as well, right? Because it's so many times that in the moment before you develop the skill set, you do stuff you shouldn't be doing. And then the trading day is over with, you go back, you look over everything, and you're like, man, had I just stuck to what I said I was going to do, I wouldn't have lost this trade, or I would have lost less, or I would have won this trade. And after you keep doing that, at some point you got to realize, dude, you have a plan that works. Just stick to it. Stop getting emotional in the moment, because that's the only thing that's happening. You're getting emotional when you're doing something that you shouldn't be doing. That's like getting into a car, you know the direction, you know where to go, and then for some strange reason you go the other way. Like, why would you ever do that? It's going to take you forever to get to your destination. And in this case, that destination is profitability.
Yes, there is one the thing that Michael said, and it was the pure proof for the patience. So I asked him about the stop loss in gold, and he said about that gold sometimes volatile, and he will lose that trade, etc. And there is a little thing, punishment. So he will punishment. There is a punishment there, because he will stop trading, or I will stop trading, or Paul will stop trading for today's session because we made a loss. And now I will break little patient, sometimes going with little punishment. So I think no trading for today. I will relax. Tomorrow I will continue. And that, I think, will give the best performance.
Yeah. Even if you think about it, right? Even in any sports game, right? If any player's performing bad, what do? You got to go sit on the bench. Go sit on the bench because you're not performing right, right? Get your mind back right. Get yourself together. Get your head in the game, literally, and then you can get back out there. Because right now you're screwing up.
I mean, you can't come off the back of any trade, win, lose, or break even, right? And jump straight into another one. You shouldn't do it. Because you need time to reassess and recalibrate. There's a reason, like on, in I don't know, this is ridiculous. We're going so out far with metaphors now, but if you ever know how like a battleship works, right? If their computer fails, it takes them 2 hours to boot it back up because they have procedures to go through in order to make sure that when they need to fire the missiles, they fire. So you need to make sure that it hits the target. So you can't just turn the computer back on and it boots back up after you have to, there's a procedure you have to go through. You have to look at the market again. You have to, where are we now following this move, and then make adjustments. And the best way to do that is just to walk away from your desk, take a couple of days, and then return to it with a fresh set of, because people don't understand that excitement is an emotion, right? I'm proud of myself. I've had a positive trade. I want to do it again quick. But that's still FOMO. It's still FOMO.
Yep. Agreed. Great session, guys, as always.
Yeah, great to see you all on a Monday. Makes my week start off much better. So thank you very much. Yep.
And great questions, guys. Like, we had a lot of good questions today. Like, I don't think we never really get this amount of questions that we were able to answer for the traders. So I think that was really good too.
Yeah, keep them coming. All right, take care, everyone. See you now.
All right, guys. Stay safe out there.
Bye-bye.
Hello, Jannie, Howard.
Hello.
Hello. Hey,
How are
Howard,
you
Sam.
guys? How are you
Very
guys?
well,
Good, guys.
thanks. How are you? Sorry.
Yeah, very good, very good. I think there's a bit of a delay. That's why sometimes.
No, I know. I think it's like when you say how you guys, it's like, oh, is Howard going to go first? Should I go first? I think that's all it is. How was the
No
day,
worries.
guys? Did you catch any trades?
Yeah, I managed to catch two.
Yeah, me too.
And I
Me
recorded them as well, so
So have I. So this is going to be a good
Oh.
session.
it's going to definitely be
Yeah.
good. How about you, Howard?
Yeah, not so good to me. I kind of bought an upside breakout in the euro earlier on today, but then it came back on me. So no, I'm kind of I'm flat for the time being. So nothing.
Better than being in negative. So
flat or flattened.
yeah,
Yeah. Nothing wrong
It's
with
not
a break even day. That's for sure.
exactly.
Okay, if you don't mind, I'll just quickly share my screen. Is that okay?
Yeah, of course.
Okay, let's do this. So, okay, let me just. Okay, there we go. So we had a gap
We
to
did.
the
Yeah,
upside on the NASDAQ. Did you get the same on the S&P?
absolutely.
So it was gapping, obviously, to the upside. So that means we've been trading outside Friday's high pretty much the whole day. And if you look here, I've got the pivot points here, and this is R2, and it broke through R2 and then came to retest this level. And then from that point, I just typically look at my multiple time frames. I want to make sure there's a bullish candle on at least 2 of the 3 time frames. And if I get that, I'll look for entries on the 1 minute time frame. So let me just get the recording up. Make sure it's the right one. All right. So yeah. Okay. Now look. Yeah. This is exactly what I've been saying. Okay. So it was on R2 and then it bounced off. Now you've got a bullish candle, the 15 minute, the half an hour, and the 1 hour, the last closed candle. So from here, I'm interested in taking only long positions. So you can see where we are right here. We are approaching the support level. Okay. It obviously broke out there, but now we're reaching this support level. So this is where I'm starting to get interested. Okay. I want to see price rejecting this level, but I'm also well aware that we've got this 1 standard deviation right below it. So from this point, I will focus on the actual formation of the candles. It needs to reject. So let me just play the video so you can see what I am talking about. Okay. I'm just pointing out the bullish candles on all 3 time frames. So this is in this occasion, like all of them are lining up. Usually I just want to find 2 of them. Okay, so now I can't see how much time is left in this particular candle. But as I said, I want to see price rejecting there, but you can see it's piercing through. And I know the 1 standard deviation is also a support level. So let's just wait. Can I forward this? Okay. Now, if this candle, let me just pause. Well, I don't have to pause. If this candle closes bullish and the new candle just follows through, then that would be my entry. But that's not happening right now. Okay, this candle is still busy forming.
Yeah.
And there it approaches the 1 standard deviation. I'm very interested, but I still wait for price action to confirm the reversal. So I'm just waiting for this candle to close, and then I'll just tell you exactly what I'm looking for before I take the trade. Minute is quite long. Okay, so there you can see it's pulling back up, right? So it's finding support. I'm still not in the trade because I still wait for that final confirmation. Right now, there are 2 things that I will look for. Exactly the same thing as I explained over here. I would wait for either this candle to form a bullish candle and then the next one to follow through. That would be my entry. Or if I get this, because we are going off this 1 standard deviation, if it breaks this candle, in other words, completely engulfs it, like takes out the complete candle by itself, that's what I'm saying right there, then that would also be a valid entry. Okay, so that's what's happening right now. My finger's on the button and then I got in there. Okay, so the stop loss is here, and then the take profit, you'll see I'll move it not quite at the high, but very close to the previous high.
Yeah.
So the previous high is a good place to take profit, but I don't. If you just decrease it a little bit, it just increases the probability for it to actually hit your target.
I would rather take a little bit less and actually get it, because it does happen that sometimes it gets very close, and then it just reverses on you. Okay, but pay attention.
Sorry, yeah. There was a session last week. I was with Howard. That exact same thing happened to me. Got that close to the take profit, and boom, got me out break even.
Yeah, I've learned that lesson too many times. So I just like place it slightly lower. But if you look at the 15-minute, the half an hour, and the 1 hour, they're all bearish at the moment, but the candles are still busy forming. That's why you always have to look at the last closed candle. So the current candle can give you, like, you may think, oh, this is going to reverse. It looks the same on the half an hour and the same on the 1 hour, but always look at the last closed candles, and you want to get 2 of the 3 lining up. And then just like when you time your entry, then, again, you look at the 1 minute time frame, and you want to find something that makes sense. So it needs to come to a support level. In this case, it didn't find support there. It found support at the 1 standard deviation, and then it pushed up. So now if I just forward this a little bit.
Beautiful.
Yeah, like I did pull. Was it this one or the next one that pulled up? But yeah, you can see. So I think it was around there. Like, come on, Nazi, don't do it to me. But luckily, it just carried on to the upside.
Little upper shadow there.
Yeah. So let me just. Okay, we're getting pretty close now.
Yeah, I'd be getting pretty nervous now. I'd be like, oh, come on, man. just hit the damn take profit.
Okay, so that was the first trade. Here's the second one, not long after. If I just press pause here. So this is the trade that I took. And you can see it did hit the previous high. Actually, it just kind of broke the high there. But now it's coming back again to a support level. And I'm still bullish because the last closed candle here is bullish. The same there and the same there. So I still got the perfect 3 lining up. So I'm still long. I'm looking for an opportunity that makes sense. It goes to the support level, and then I'll just show you what's happening over here. Okay, so I don't just enter. I want to see first the price action. The price action needs to confirm, and that's going to be like a bullish candle, or if it just engulfs. So let me just, okay, so I think this candle, I don't know how many seconds are left. Okay, I'm getting ready, so it must be getting close. And then I don't just enter immediately after the close. I wait for the new candle. You see there I enter. It's just that little bit of I just wait a little. Okay, I just move my stop loss to that low, and then the take profit to the previous high.
Yeah.
Okay, and there, if I just forward this on. See, that was a pullback. Okay.
Nice.
Very nice.
And there we go. Why did I stop it there? Anyway, so those were the 2 trades. So I hope that makes sense. So it's like really keeping it simple, but focusing on the longer time frames to get your bias that's the most important thing. Like if you just got to focus, and I know I've said this before, but if you just focus on the 1 minute time frame and you try to trade breakouts and support, resistance, and that kind of thing, if you're a scalper, you are going to struggle because you don't really have a bias. But yeah, the bias here was pretty clear, and that was, we gapped, and then we just broke these pivot points. That one found resistance, but this is pre-market. Then it broke through, and this is the open around here.
Is your bias more on the longer term? Is it still bullish at the moment, or?
You mean right now, or? Right now, well, no, I'm not. I'm a little bit, this time of the day, I would probably be heading a little bit more bearish because of the 1 hour here, but I need at least another candle to confirm that. So because these 2 candles are still bullish, and you can see this long wick to the upside. So I think from now, I would look for opportunities to go short if this candle can close bearish.
We had very similar trades, but my last trade was actually bearish. I've kind of switched a little bit more to a bearish. In fact, let me pull up my, what do you call it? Let me present the screen real quick. Oh, Robert's back. Robert, I missed you. You weren't there for the last, I think the last 2 sessions. But glad to see you back, buddy. All right.
Hey, Robert.
I'll do entire screen now, it just makes it easier. All right, first I'll pull up TradingView. Let me just add that to stage. There we go. What's going on? All right. So the two positions I took, I took one here just after open, bullish one, and I think I got out around here somewhere, a smaller position, and then I took a bearish position from here to about the point of control here. But let me show you the recording. I mean, the second position, I actually got in late in terms of the recording, but on my live account, I got to show you the actual, like, oh, it was perfection, absolute perfection. So this is the first trade. I'll just fast forward it. So again, very similar. We just opened. I'm seeing a lot of buy pressure come in the market. And although when we just open, I don't generally jump in just because I see a lot of buyers or sellers. I want to see, are they actually successful, right? So I want to give it a little bit of time just to see, are they actually, you know, in this case, buyers, are they actually able to push the market up? And there were like heavy buying going on, and they've been pretty good at pushing the market up, and any sellers have been kind of struggling. So I thought, okay. And my overall bias was bullish up until we reach this big box area here. So this area was my next level. This big box here was my next level of resistance, where I'm expecting the market to pull back for a bit. So I got in, and to be fair, it was a pretty standard trade. I mean, it kind of just, nothing really major. There was a few things like spoofing going on. Now, I had to point this out because this is ridiculous, right? 760 damn contracts on the sell limit side. I mean,
oh, that was me. Sorry, guys.
Oh, yeah, I thought that was
Sorry. Sorry, carry on.
Spoofing the market again.
Yeah, for some reason.
It was just a prank. Relax.
An illegal prank, Jannie, and a very illegal prank, that is.
Sorry.
But yeah, I mean, this would usually worry people, right? You don't want to be buying into 760 contracts, right? Sitting right above. I mean, it was literally sitting here. 760 contracts would be here, right? No one wants to be buying into that, right? But all throughout the whole day, and not yesterday, but sorry, Friday, a lot of spoofing going on the sell side. So someone out there is doing a bit of legal activity. Let's just put it that way. But you would see it never actually gets executed. They cancel it before it could ever, get executed. So it is completely spoofing. So I wasn't too worried either. But spoofing can slow down the progress of a move, because naturally there are people who are going to be, other buyers are going to be a little bit hesitant buying when you're seeing, such heavy contracts on the order book, right? But again, I mean, we had this Friday and it blew through very easily. So I wasn't too worried, but I was still marking out those areas. And just in case it was real, you want to make sure you get out, right? But it was going pretty good. I'm just going to fast forward it because there was nothing really much to show. We did have a pullback at one point, but I held through it because this area that I'm marking out now is the next gap in volume. I was kind of expecting, I was expecting a pullback into that area and then a continuation. So I thought I'll hold the trade anyway if we do pull back rather than get out now. So we did eventually pull back. I'll just fast forward it a bit because there's not much to see. Yeah, here's the pullback. And I'm waiting to enter again once we get to that area. We almost get to it, but we don't. We get very close, but it doesn't quite touch it, which is a bit annoying. Otherwise, I would have entered another position. That's how low it went. I wanted to get to literally this area here. It didn't do it. Otherwise, I would have added my final position onto it. But I added it anyway because I could see sellers getting trapped, heavy buying coming in. I'm happy that this was the pullback and this is now the continuation. So I put my final position on, and I do eventually get out at quite a silly price. I'm a bit annoyed that I got out, and it was mainly because so this black line here that I drew out, it was just struggling to break through 5805, and there was a few contracts, but they weren't actually spoofing. These were legit getting actually executed, right? So, and it was just struggling to kind of break through it. And I thought, are we looking at a potential, up, down until eventually it breaks through? Potentially. And then do I really want to hold it again for another retracement? So I thought, okay, I'll get out. And if it does retrace, I'll jump in at a better price down here. Sadly, didn't quite work out. It did literally, as I got out, maybe 5 minutes later, it blew through and then went to my take profit, which was a little annoying. But nonetheless, I think I got out an all right price. And then the second one, if I show the second video, I've got to find it now. What am I doing? Let me just try and find it in the folder. Here it is. And then the second trade of the day was here. Now, I actually entered on my live account, literally right here, 0 drawdown. I got it perfect. I entered. Again, I knew this area is good, almost 99% sure we're going to see a pushback from this area. So just because I marked it out before, it's a very significant area. We're definitely going to see some kind of pushback. And the moment I saw buyers putting too much money on the line for being very high up already in that area, I kind of already preemptively knew that they're going to get trapped. So I can already enter. But then I quickly started recording and then entered on TradingView. So added my positions and took a little while to kind of go down. But then we had this beautiful explosive move down. It happened somewhere around here. I wasn't even looking at the market at this point, and it was lovely. It was beautiful. Where is it? It was here. There it is. Out of nowhere. Just, I'm just kind of chilling, looking at my phone a bit, and then boom, we just had this explosive move down. It just kept firing down, and I was like, oh, that's the one. That's the one. But I did get out at the point of control, just because naturally at the point of control, which is this blue line here, I got out around this area. You're going to see a bit of nasty price action. You're going to see a lot of wicking, and the point of control moved up as well. So I was like, oh, damn.
Yeah.
So I got out. But again, two okay, decent trades. Again, I probably could have held it a little bit more because it has completely blown past the point of control.
Do you know what gets me out a little bit sooner is if there's a really big candle that goes in your direction, right? And you go, this is a very oversized candle, and you're like, this is probably going to pull back. And then when you see it pull back, then I just like, okay, I'm out. And then it did pull back, and then it just continues. But in the heat of the moment, it's it does mess with you, or it can mess with you for sure.
Exactly. And look, I mean, the point of control is the heaviest traded area, right? Or the most volume in that area of the day. And you very rarely do you ever see the market just go breeze through the point of control. It will always just have that choppiness to it. So at this point, count myself in some weird way lucky that we just had this beautiful push down, right? But just gapped, basically, so many price levels. I might as well just get out. The point of control moved up. I know it's going to start wicking and being all nasty, and we could see a retracement. And do I want to hold all that and hold through all this nasty price action, all this battle going on? Yes, eventually it did push through. But again, we had a good 5, 10, 15, 20, 25 minutes of just nastiness that would just make me nervous for no reason. So I'd rather get out. My next area, though, of potential buying would be this area here. And And I do think, because we did gap, I do think eventually this gap will be filled. So I'm not saying it will happen, obviously not now, but like in the next couple of days, maybe. But I do have more of a bearish bias now going forward in the next couple of days, unless the market shows me something else. So tomorrow, my overall bias is going to be more bearish. I'd rather be selling the market than buying it. If you're talking really long term, I will still have a bullish bias, but I'm looking at this is the start of a bigger retracement on the longer scale. That's the way I'm looking at it now. Probably until we get to, around these areas here. But we're going to see, in my opinion, again, and it's just, based on, I guess, opinion, but we're going to see stuff like, in the next few days, maybe we'll get down to here as well, a bit of pullbacks, and then eventually we'll have, continuation of the overall uptrend, I would say. So that's my outlook on the market for the next few days. So tomorrow I'll be looking at shorting, unless we, magically blow through this area. Then okay, well, then it's bullish. But as long as we're below this area, I'm looking at shorting it now. And I think on Friday, Howard, I said the same, that I'm bullish up until here. When it gets to here, then my bias will change. Yeah. So
yeah, we're looking at that sort of lower shadow on the daily, weren't we? On Friday, it looked like it wanted to go higher, at least over the short term. But as you say, limits to it.
Yeah, exactly. And that's pretty much it. That was my trading day.
Okay, great. Like, I just want to show you a potential trading opportunity busy forming right now.
Sure.
So let's have a look. Okay, so can you see my chart?
Yes.
So yeah, as I said, I am bearish. I was just waiting for the 15 minute to close. So I do get 2 out of the 3 lining up. We just had a breakout, and I don't trade the breakouts, as you know. I always wait for the retest, but now this could be like a complete breakout failure. We'll see. I needed to come back down for it to be valid, but that's why I said potential trade.
Yeah.
Okay, but right now it's not giving it to me. So this is like, I never trade the breakout, because you'll get stuck with so many false breakouts. Like it's just that the probability definitely increases when you wait for the retest, and your risk is much clearer. It's very clear where your risk should be. So if this can now just form like a dome shaped kind of pivot really, and comes back down, I'll definitely be interested in taking this trade. So, but as of right now, it could take a couple of minutes, so we can either sit here and wait for it, or it may not happen. Just give it a, how long is this candle? 30 seconds. But do you see, like, does that make sense? Like, I see, like, look at this 1 hour candle, it's bearish, that's bearish, and the half an hour still got another 7 minutes, but that's also going to give me another bearish candle. So I'm definitely bearish, but now you need to find a setup that makes sense just on the 1 minute time frame, that lines up with what you see on the longer time frames. So anyway, I took over the screen because I thought I'm going to get it a bit sooner than this. Okay, you see there
we go.
We'll see. Yeah, so let me just wait.
Think about it.
This is NAS 100.
I don't mind. Yeah. This is so it's the June contract. Obviously, we're now in the June contract. So I'm trading the micro NASDAQ. So that's MNQ M5, which is the June contract. Yeah. But it's the same. Like you can see setups on the June contract and still execute the trades on CFDs. It's the same thing.
Sure. Yeah. I mean, that's what I do pretty much. Yeah.
The prices are different, but the movement. The moves are identical. So, okay. Howard, I think we had a question about the pound US dollar. I'm going to wait for this one. I just don't want to.
Go for it.
Let's have a look. Hang on.
We do. Andre.
Okay.
Andre asks, hey, what do you think of pound US dollar this week? Howard is the currency man. So whenever.
Yes.
Okay.
Sorry. Yeah,
Shall I?
I'll hand it over to
Okay,
you. If it happens, I'll make a noise.
Yeah,
Sorry.
just make a
Okay.
bell noise. And,
Absolutely.
Or no, go ding 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 ding.
Okay, should be coming through.
There we go.
Okay. Yeah. So pound as well as the euro, they've been correcting from their big kind of swing highs lately. We're seeing a little bit of support coming in at the first kind of little pivot point on the daily chart, just 129.11 or so, and just a little bit lower down. We've got the real strong support 128.61. So for me, I think we're kind of basing in that window. I have the pullback as just a minor correction within the uptrend. Nice healthy uptrend. You get these kind of fake outs every so often, and then the market comes back to a previous support level, and then it goes again. It seems to do that quite a lot. So I'm kind of looking for a base around, I'd say, pretty much current levels before we broke up and see an extension of this thing up into the sort of 131s. So that's really where I've been on euro dollar and cable. So the last few days, just waiting really for the thing to do its correction, complete it, and then jump in on and get on a swing which will take us to new highs for the uptrend. So yeah, that's really kind of where I stand on that.
So you
one.
basically are you still basically are you, sorry,
it's quite a bit of support down here, but yep.
Sorry. Like I think you're right, Sam. There could be a little delay. Just to go back to, were you just on the euro dollar or were you on sterling?
On sterling dollar cable.
Okay, so in that line, if I don't know if you can just make that, that one. So the bottom line, that's your level. What you're waiting for, right?
Just basically between these two lines, really.
A
couple of
so
in this I mean, we've already tested it once, twice today as well now, but a little bit heavy on the earlier rally, so maybe there's a bit more downside before we can finally make the low. But this is kind of the buy zone for me, but waiting for confirmation to jump on it, really.
Okay. Yeah, I mean I think sorry to interrupt you. The pound US dollar has been a bit tricky. It's been very tricky, definitely today. Very tricky today. Looked like it was going to bounce off and just came right back to the open, more or less.
Yeah, I'm just having a look at it now. It had a little fake out, didn't it?
Yeah.
From our last
discussion. I bought breakouts in the morning. I bought breakouts in the morning on both of them, but
because it blew through one zone and then completely faked people out and then dropped. Because that's quite I've noticed
this was the move we're looking at, wasn't it?
When I used to trade it. Yeah, that's it. I still got the one moment. Let me just put up the screen real quick, because I still have all the drawings from Friday that I drew on the pound. So this was on Friday, what I thought would happen, that we would get up to this level and then it will push down. And we got up to that level, if I stretch that across, had that fake out, and then so that part would have got me as well.
Yeah.
Because that's just not a small fake out, that's quite a bit actually. It was a few candles, boom, 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 and then boom. Down. So that was a little nasty one there.
I love this market.
I'll tell you what, that's why I really prefer the NASDAQ, because you just know exactly what time of the day the volume is going to come in. And you could just with Forex it's a lot, it's really a lot more trickier, because it can move at any time, right? It can I don't know,
particularly like the yen. Yeah,
definitely the yen for sure, and even the Aussie pairs and so on. But like the Euro Aussie and so on. But I mean, even the pound US dollar as well. You can occasionally, well, when I wake up in the morning and I look at the charts, like, damn, the pound US dollar like went to the moon. It's like over the Asian session, you know.
Yeah.
So it's very difficult to time it that way. So the longer time frames make more sense. But yeah, for the NASDAQ, if you're a scalper, I would say trade indices definitely.
Yeah.
Definitely. You know. But
I would
anyway, sorry.
agree.
But I was like, I was gonna like see. I'm on the opposite end, and this is not the first time I'm on the opposite end. Doesn't mean I'm right, by the way. But I think I'm short. I'm pound US dollar. I am more bearish than bullish.
Okay.
You know, and it's only because of the if you, I mean, I can show you quickly the screen. But this is also what I had on Friday. So
are we talking when you say you're more bearish and bullish, what kind of
my bias,
more
the
like
bias
immediate
is,
or so longer term, right?
Just the
for
bias,
like the next day
not,
or two, or just a bias?
Just a bias. So I'll show you. I think who's sharing their screen? Get off my screen.
Oh, is it me? My bad.
That's not Jannie's charts.
It's gonna hijack you.
This is the thing. So I'll tell you why. Okay, because we are now. There's not many. How many trading days are left? 5 trading days left. Okay, but if you look at the pound US dollar, like this is the beginning of March, and this Fibonacci levels I actually took from the monthly time frame on the candle itself. Okay, so to get a range there. On the candle itself, you can do that. That works pretty well. You can get some data from the longer time frames, like the monthly. I don't necessarily make decisions on that, but it's a very good place to get some sort of, some figures. So the Fibonacci levels, and the other thing is the ATR. I don't know if I've mentioned this to you before, Howard, but if you look at the ATR, like if you just look at the low and how many pips are you from the high and from the low? Obviously, you're 106 from the high and 349 from the low. If you add them together, that's 455, something like that. And if you look at the ATR, you can see the 2 is above the 14, so that means the candles are bigger than what the 14 suggests. So you typically focus on the 2. So the 2 ATR is 461. And the 14 is 420. So if the 2 is 461 and you've already moved 450, is that 450? 456, whatever, 455. Do you understand? You kind of in terms of what you can expect the average size candle to be, and it's obviously calculated based on what the past candles has done. So if you're at the upper range of the ATR, in this case, like you're definitely above the 420, which is a 14 ATR.
Yeah.
Then I'm like, okay, I'm looking for a pullback. This is the monthly time frame. So on the smaller time frames, if you look now, and now you'll see the fib levels much clearer, and then you can see that this is where the month started. It happened to be the start of this rally. It's the start of the month. So now we are, I feel we are now topping out. Now, again, of course, I can be wrong, but just based on what I showed you on the monthly, the fact that you've already moved, this is a very strong rally.
Yeah.
This is a very, very strong rally. And this arguably should have been, so this is your sideways consolidation. Arguably, this should have been the second leg if it was going to continue. But the probability for that to happen is very low because you've already maxed out on your ATR. You've already maxed out on what you can typically expect the average candle size to be on the monthly time frame. So just based on that, it's like you can go, it looks like it's going to break out, but it's tired. It's tired, right? It's already moved its potential. So that's why I'm expecting a pullback to at least the 38.2. Okay.
I would actually agree with you. Yeah.
So look, if you want to long, I think a much stronger place to long would probably be the 50 or the 61.8. The 61.8 is obviously much stronger than the 50, but it does, sometimes it bounces off the 50. It never sees the 61.8. So it's just going to be a case of, and this is just a 1 hour time frame. Then you can add confluences and you can look at longer time frames. Maybe what does the daily look like? You know, maybe you want to see some sort of a bullish hammer, for just as an example, at this level on a longer time frame, and also bouncing off these levels. But for take profit, I don't leave trades open to the 50 or 60. I'll go for something that's very likely to hit. And this area here is also like an area you need to watch, because that's obviously a pivot there. And then
that's what we're looking at.
Yeah. Oh, that's okay. So, but the 38.2 is just based on what I, all the things I just explained now. I just think like it's moved so much that it's probably due for a little correction first. And if your bias is still long, then, for me personally, a better area would be around the 50 or the 61.8 for a continuation, to go long. Does that make sense, Howard?
Yeah. Although I think if it got down that far, I think that would probably break the structure a little bit for me. If it got down that, if it retraced that deeply of it, because for me it's just a minor correction within a more powerful advance. So
okay,
I'd expect it to be more time based than price based.
Okay. Yeah, but that's just this is why I said in the beginning, like, we probably won't agree, but that's just how I see it at the moment. So yeah, it'd be interesting to see. Sorry, Sam.
I don't know. I'm kind of on the fence with. It's a hard one. If I show real quick, so the way I look at it,
yeah, sure.
I'll add it to stage. The way I'm looking at it is on the longer term. It's just a 4-hour chart. I'm seeing a clear, like, nice gap in volume here. We broke through it, and now usually what happens is it comes back round, tests from the other side, and continues. I'm not looking to be totally bearish until we get all the way up here on the pound. So I feel like we could come down, but the lowest we'll go is really down to here, I would say, to the bottom side of that, where that volume, where the bigger volume starts again. So the lowest I can imagine it will go down will be around here before it continues, but it could be anywhere within here. There could be a reversal.
That's the thing, yeah.
But then again, like with currencies, it's a bit weird. Like you would, like for example, going back to that gap in volume that I thought it would bounce off, right? And it kind of did a little bit, but it broke through. But that's why something like the footprint will just tell you so like a world of information. Because if I switch it over to the footprint and actually look what happened there, let me just zoom in so we can actually see. You're seeing like the numbers are pretty standard, nothing outrageously big. We're getting to that area, but there's nothing that's really showing, it's going to go down. Maybe you could say this 280 is a bit bigger, right? But there's nothing terrible. Like, there's nothing that would make you want to short it based on the contracts, right? But we break up, and then we start seeing the numbers on the sell side getting big. 200 again, another 100, another 200, 300, 147. We're getting bigger contracts coming in, another 100, another 200. So you could have, one position there, another short position there. And potentially you could avoided getting, trapped lower down here. And then it just moved kind of nicely, and, you target whatever aerial structure. But this is the thing, like, it's very hard to, like, especially in the longer term, like when you got these big areas, like this one here, I mean, it could bounce from anywhere in here, and it's very hard to pinpoint where that could be.
That's a big area.
I think it will probably want to take out this low. Yeah, exactly.
Yeah, I think it will. Sorry to interrupt, Howard, but the one support level you have there, that one I also agree with, that's a potential, and that's around the area is the price level is 1.286.
Yeah.
And the one just below that is 1.284. So that for me, that would be my zones. Because the 38.2, it can, because sometimes it won't just like dead stop at that support level. It may just break through a little bit further and then come back. So that's so Andre, I'm not sure if that answers your question, but I think we and in the short term anyway, we all kind of agree that it can potentially go lower before it goes back up. It's definitely bearish on the 1 hour. That's not a good structure.
Yeah.
So
yeah.
anyway.
So my if I had to guess like a pinpointed area where it will probably reverse and start pushing up again would be that black line here. So quite dead in the middle, just because that's where the volume drops off, right? We have like a really nice, amount of volume, and then it just sharply drops off and becomes low volume. And generally speaking, when you see like a big drop in volume like that, price reacts very quickly to it again. So that would be, if I had to guess, like pinpoint an area, it would be that. But again, it all matters when it actually gets there, what it does. And then I would need to look into the footprint and actually analyze what is being traded. Like I would be too scared to just put like a pending order there. Do you know what I mean? And have like a stop. It might work. It might work, but
we won't do that.
I'd be way too scared to do that. Like, I need to see the footprint confirmation. Otherwise, there's no way I'm entering. Because you could easily get trapped or faked out so many times.
Yeah. That's the thing about Forex. But also, like, I know you're showing the footprint, but the volume in something like futures is just, it's much more reliant. That's actual volume. That's actual volume.
Yeah.
And in Forex, it's not. So it definitely is. It's trickier. It's trickier to figure out.
But like you said, Jannie, you can use the futures volume and base your decisions. Like what I showed there, that was the actual futures, pound futures. So that volume was correct.
Yeah, no, I think that's Igor. Igor's a fan of the volume. Yeah, I think he uses the volume from futures. Yeah, I don't use the volume from futures. But okay, so you get it from the Forex futures markets.
Yeah, direct from the futures. So that's actually from one exchange, and the one and only exchange, the CME exchange data. So
yeah, I guess the only caveat I guess the only caveat I'd have is Forex is really interbank. It's not really futures. It's futures is a very small subset of the whole market.
Very small. I mean, I agree because the Forex market is a $7.5 trillion a day market, and Forex futures represents about $100 to $150 billion a day. So it's like 1 or 2% of the volume. So it's a very small sample.
That's the thing. And that's why you will actually see, like, if you look at the S&P 500, for example, the CFD version, and then compare it with the futures, the E-mini, the charts are 1-to-1. Like they move pretty much identically. You might get sometimes like a slight deviation, but we're talking like a few points at most. If you're looking at currencies or like gold, commodities, and you compare the CFD with the futures, they are pretty much 1-to-1, but sometimes there is actually quite a difference in the chart. So you could be stuck in a position where you're analyzing on the futures and it's going up and you're like, oh, this should be good. But you executed on CFD and it's just not doing the same. You're like, damn
it. Yeah, exactly. No, I think Forex is definitely more difficult to trade. It just is. Yeah. It definitely is. Howard, do you have any other Forex charts that you were looking at or not really?
Yeah, just one sec. Let me present. I was going to have a quick look at dollar yen. 1 sec. Okay, that's my dollar yen. Okay, so so this one's broken a little bit firm. So it had a look at that 150 a couple of days back and rejected from it, and now today we're breaking through it again. So it looks like it's seeing a stronger advance from the recent low. A much stronger resistance area for me is this kind of above 151, 151.30, where we've got old support there and a lower high on the way down there. So that's an area that I'm kind of looking at as we're heading up there maybe tomorrow, and then we'll see what happens. We can start doing some wicking in this region. But yeah, basically correcting this downswing, 158.87, 146.54. I think it's a correction. And like a bear market rally. For me, we've got what appears to be a major top here at 161.95. So the first leg down, a kind of a retest, which breaks down into a kind of a three-wave move, ABC kind of move. So we've got a lot of people trapped above the old swing high here. Breakdown, and then I think this is a kind of a corrective bounce. But for me, I'd be looking for the thing to probably top out in that 151.5 region. So really kind of waiting to see how we react when we get into that zone. Probably tomorrow by the looks of things. It seems to be quite a nice breakout.
Yeah.
So that is sorry, I'm trying to zoom. Oh, that's the dollar yen. Okay, so and you don't find any correlation between the dollar yen and say the pound US dollar. Do you find that, or not really?
Not a whole lot, no. I mean, obviously the dollar is the dollar kind of thing, but dollar yen seems to be much more kind of yen related than dollar related. It's pushing. Last few days it's pushed quite sharply higher. I guess the others have cable, but to me it seems to be a bit more yen. Let's just get the euro yen, for example. So euro yen has been also a little bit strong. I think it's bounced because we had the risk on with the stock markets. Aussies tend to go up a little bit when the stock markets are looking quite good. So a little bit of it seems to be more yen weakness perhaps than dollar strength, but it's a bit of both on dollar yen, I suppose, at the moment.
Yeah.
So that's euro yen. Massive resistance up in this kind of 164, 165 range. But overall, just stuck in a bit of a range and probably close to the top of it by the looks of things.
I mean, it's quite a beautiful range, structurally speaking. I mean, it's almost a textbook example of a range,
Yeah, like I mean, you've got
multi-day swings inside it.
That. The euro yen is a nasty pair, man. That thing, it can be I don't know, it's not your best friend. It can be a tricky one to trade for sure.
Yeah,
I think the pound just sorry.
Yeah, I was going to say it does these kind of nice two-day runs every so often, and if you could just catch the start of one of those 2-day runs, you can just let the thing go. It can be quite a good one.
Yeah, but do you find like that there's a specific forex pair that you trade more than the others? Would you say that's the euro dollar? For me personally, it would be the pound US dollar.
I'd say more euro dollar. I feel a lot more comfortable with euro dollar than pound dollar. I think pound dollar is a bit more whippy. Euro dollar tends to be a bit more kind of, I wouldn't say predictable, but
slower, like more kind of steady. Is that what you?
I guess it's like you're looking at the NAS and slow, more kind of steady Eddie.
Yeah, steady Eddie. Yeah,
as they say.
I just feel like when the thing is like when the pound moves, it's clear and it moves and it like you can get really decent risk reward ratios compared to the euro. That's just for me but we don't focus on the same time frames. We don't look at the same strategy, so all those things plays a role. But for me, it's just when the pound US dollar moves, it kind of moves, and you can get like especially in the afternoon.
Yeah.
You are both. No, you're not. Where are you, Howard? You in Switzerland?
Switzerland, yeah.
Switzerland, yeah. What's the time there? Is it like a similar time to the UK, or there's like an hour difference?
We're 1 hour ahead. Yeah, 10 to 7.
Okay, but so if you look at the 4 hour candle, I don't know if you find the same thing, but the 4 hour candle that forms from, I'm talking now specifically like MT4 or MT5, the platform time, like 4 p.m., like 1600. That candle from 16 to 2000. That's always that's usually the biggest candle on the 4 hour chart. So that tells me that that's when it's likely to move. Do you also find that, or not really? Like if you just look at the euro dollar today, you see that? Where's your 4 hour chart?
So,
No. Are we looking at your chart now, Howard?
Yeah, this is Howard. There we go. 4 hour chart. Yeah.
yeah,
Oh,
that
there
is
we go.
mine. This is my 4 hour euro dollar. That's it.
Yeah. So see that last bearish push to the downside.
Yeah,
That's the 1600 to the 2000 hour candle, and you can go.
But that would be within the London New York crossover, right? So naturally, that's going to be the most volatile time.
Yeah,
but I mean, sorry. I
yeah,
think
as the states come in.
Yeah, but the thing is, like, the point I'm trying to make is like when you look at say the weekly time frame, if you see a setup on the weekly time frame and it's definitely bullish, only 1 or 2 of those trading days will make up for the majority of that move. Do you find that to be true? So the same is like true for if you get a setup for the daily. There's gonna be like, especially on the 4 hour, there's not that many 4 hour candles. There's like 6 of them, and probably awake for. Well, I'm awake for 2 of them. I sleep the rest of the time. That's not okay. Maybe not. But what I'm just saying is, like, if you get a setup, it's gonna happen It's not gonna I'm not looking at your chart, but if you look at the euro dollar on the 14th of March, for example.
Let's see. This one here,
Okay, why is yours looking different?
where it breaks higher. That's this one here. That's the 14th of March.
Yeah, well, that's interesting because my candle just before that bullish candle is also a bullish candle. Yours is bearish.
Interesting.
Yeah. Okay.
I wonder what mine shows. 1 minute.
Yeah. Wait. What you got?
That's
4 hour, 14th of March, euro dollar, right?
Yeah.
So I'll do the euro future, see how that looks, and then I'll go to 14th of March, 4 hour chart. Let me switch over. Yeah. Mine is also. I think, Howard, you're looking at the 17th of March.
Let's see. 14th. Look, see on the top left.
Really?
Right there. Yeah, that's the 14th of March.
That's really odd. Yeah, mine's bullish as well. the one.
Well, as in a bullish close, or
yeah, bullish close.
It's a bullish close. Yeah, it's like a really nice, like it's pretty obvious setup as well.
Yeah, it might be when it just the way the platform is.
Howard, it sounds like you talking under the bath or something. There's a bit of a connection problem there.
Yeah, I think it.
Yeah. How's that?
That's fair. Anyway, I can't even remember. But let me just show you my chart, and you'll see exactly what I mean. Do you mind if I just quickly say? Yeah, okay.
Yeah.
All right.
Did you manage to spot any?
There we go.
Did you manage to spot any Jannie candles recently? The
oh man, the GIS. No.
You missed
Have
it.
you had?
Howard actually has his own pattern that he coined as well.
Oh, there was a quadruple bottom. We saw one on Sterling.
Exactly. And
quadruple bottom.
We named it the Howard bottom. So we've got the Jannie candle, the Howard bottom.
Yeah.
We're just
Oh, wow.
redesigning, you know, creating all
Things
these
that
new...
things that nobody wants to see.
Well, a typical example of that would be, where was that one we saw, Howard? Like, we just show the people what we're talking about. It's basically, you get a real, I can't remember where it was. I think it was actually on maybe the daily.
I think it was the daily, yeah. It was
This will probably be it.
Yeah.
So you get, it's very straightforward. Like, this is a resistance area. If it comes off a support resistance area, that's when it kind of matters, or that's when the probability is really high for it to work out. And you just want to see like a decent side, at least 50% of the candle with a wick to the lower end. And then you can just trade into the shadow. So it's TIS, trading into the shadow. So if you can identify tops that way as well. But if you can see something like this on the monthly time frame, then this little area here, there are better examples. I'll just take this one for now. This little area there can easily be like 300 pips on the monthly time frame. Easy, right? Because the ATR on the monthly is like 600-700 pips, depending on the market, obviously. So you can identify, if you see this on the monthly time frame, for example, then you can target this. You can target this wick. Okay, but again, you have to be coming off a support or resistance area. So yeah, you are definitely coming off a resistance area, this top, yeah. And then you get the Jannie candle. That sounds weird. The Jannie candle. All right. But anyway, so if you can see something like that, then you can tell. But even on the smaller time frames, if you want to, really just get into a relatively short-term trade, you can target this wick area, and this is forming exactly the same thing. Obviously, you one candle away from the high, so the probability is slightly smaller, but it's the same thing. You target the wick. You don't expect it to break the low or anything like that. You would just want to trade that wick. So
it's basically kind of unfinished business, isn't it? You've had a look at the downside, snap back up, but it wants to have another go. It's one of those.
Yeah. Yes, exactly right. And now on this last candle or Friday's candle, that's too small. There's not really much to eat in that candle. Eating into the tail there's not a lot there, so that won't make sense. But if you get a proper wicks, then specifically coming off support resistance areas, those are pretty good ones. If you can identify them on the monthly time frame, that's great. And here's an example right here. Okay.
Oh yeah.
This is the euro dollar.
Look at that Jannie candle.
Look at that beautiful Jannie candle. Even this one here. Okay. So just out of curiosity, let's have a look. So you get that this bullish inside candle, beautiful, and you can that wick, you can just trade that wick. And if you look at the what is the? I can't see. How many pips is that? 1 point. Damn, dude! I need to calculate.
Use the little scroll thing. Click it down. Your
Hang
little scroll
on.
wheel, and then you can measure.
Not an MT4.
Oh, really? Oh, MT5 you can.
But you know how you can do it? It's designed by, I don't know who actually designed it, but it's called a calculator. 01. So 0.01018 minus 0.98866. Okay, that's this little wick here is 215 pips.
Not bad.
Yeah. So you can now you can just you've got an idea on if you can see that, and even but look at let me move over to say this candle. Okay, this one here. This is not exactly kind of support resistance, but it's still the same concept. You can see that the wick area, and you target this wick. Okay, but you still need to get your timing and things like that. So the monthly is not going to, you just see the opportunity there and you go, okay, right, I want to trade into that shadow. And then you can go to the smaller time frames.
Drill down it, yeah.
Yeah, and look for typical support. You don't have to overcomplicate it. Support and resistance honestly makes up, and I've said this before, support resistance makes up or is at least part of most trading strategies. There's an element of support resistance. So you can just focus on support resistance.
Yeah.
And then you can, even Fibonacci levels, that's also support resistance and so on. But if you can target this on a much longer time frame, then that's that's what you want to trade for the month. But you can catch multiple positions as long as you just make sure that this has not been taken out. So if you take now this candle, you want to trade into this shadow, it moved way past it. But this is just one pair, so you can look at all the pairs and see if you can find something.
Yeah, this last, I think it's 150 pips. The last month's candle.
Oh, this one, yeah.
The one before this blast higher.
The one.
Oh, this one.
So if you've got that kind of upper shadow there, that's
yes.
So yeah. That's 150 pips or so, close to high.
Yeah. Boom. Yeah. That's a lot. Yeah, that's pretty. You don't need more than that. You don't need to be the best analyst in the world and try to draw all these lines and so on. You can just you're try to keep it as simple as possible. Even if you look at the way I trade the NASDAQ is you just keep it really simple. And as long as you can repeat that, the outcome, repeat the outcome. Yeah. But you're not going to get the same result. Obviously, I have losing trades as well, but it works. It just works. Yeah. And it's very basic. It's support resistance, and I use VWAP as well, which I also use as support resistance. So it's still support resistance. So very, very basic stuff. But anyway, talked too much now.
I think Howard. If you want to show the dollar index, Andre asked if the DXY strengthening today and then falling. That's Andre's question.
Yeah, again, it's literally turning sterling dollar and euro dollar upside down. It's the same kind of idea. I've got the chart there, but it's really the same pattern. Has anyone got a DXY chart there on the daily?
What, the dollar index?
Yeah.
Yeah, I've got it. Let me show you quickly.
Yeah.
Let me show you.
Go on, Jannie. Pull it up.
Already, I've said this a week ago, it's going to go up. You need to pay attention. I'm just joking. Okay, let me show you. So I've already got the flip levels here. Beautiful, found support there. And look at this candle. It's a TIS. Okay, trading into the shadow. The body, I don't know if you...
No. Stop.
Hang on. No.
Call it by its right name.
Hang on.
Call it by its real name, Annie.
What's it called?
Not a TIS. What is it called?
What when the body closes inside the previous candle's lower wick? What's that called?
That's not the Jannie candle. Sorry, I thought you meant
No, when you see a really big drop, and then you see the next candle is putting on some breaks. Okay, so the candle closes inside the previous candle's wick.
I'm with you.
Okay. But that
you're pointing out another Jannie candle there. I was like,
no.
Calling it something else now.
No. No, definitely not. So it's closing inside, and it's also that by itself is not enough. But if you can stack some probabilities, you get this. It's on the 61.8. You get that bullish engulfing candle. This is definitely going to pull back to at least the 105 area. I think 105.2. Unless we get a surprise kind of massive reversal. There's no real news events this week. There's no big news events. I think the biggest one was, there was one today, which wasn't really big. And I think the other one is on Wednesday. No?
I think Thursday we got GDP. Yeah.
Yes, we got the final GDP Q1Q. So that's going to be
big.
Yeah. But that's the only day for this week with big news. So, it's definitely turned around. So there's this, if you look at the dollar index heading up, then you can obviously expect the all the pound pairs to kind of follow, and that's why I'm bearish on the pound US dollar. Well, one of the reasons anyway, for in the short term.
Yeah.
That's the...
I wouldn't want to trade the pound on Wednesday. We've got the annual budget release coming out. Yearly annual budget release coming out on Wednesday. And there's no exact time for it as well. So you could be caught out any second.
Yes. Surprise. Yeah.
So our recommendation is just avoid pound US dollar on Wednesday. During like UK hours, I would say normal UK hours. Yeah.
Do you think that's going to have do you think it's going to have a big impact?
It can do. It depends how crazy the budget is. I mean, who knows?
Yeah, I don't know. Like it will be interesting to see.
Might get a Liz Truss moment.
Yeah. Either way, especially if there's no exact time. I mean, I would, because in the back of my mind, I'll be like, oh God, what if it just comes out 10 minutes from now, and then I'm just,
yeah,
you know what I mean? Like, yeah. Knowing my luck, that would happen.
But how would you like if you leave your trades open for because you leave trades open for what would you say is the average duration, like a few days or
maximum by the end of the trade day plus one.
Oh, so just for you close your trades before the end of the day?
The idea was the next day.
Oh, okay. No, because I was just wondering if you were to trade for multiple days, leave a trade open for multiple days, how do you manage news events, like high impact news events? Do you but you don't trade it, so I can't ask you, but I'm going to ask you anyway.
Yeah.
How do you do it now? How do you do it?
I try and avoid the real flipper coin stuff, unless I've got a massive stop, but invariably no. I'll try and avoid it, trading over FOMC or non-farm payroll or CPI kind of thing. But beyond that, I think all the other stuff I wouldn't get too worried about really. On the US side, obviously you've got you've got stuff on the other markets as well. But the big news events, then you've got to be a bit careful.
Yeah, I mean, my recommendation would be to literally like 30 seconds before NFP comes out. Just close your eyes and just hit buy every time.
I was going to go short. But you
never know. You might. The moment you open your eyes, you might be like celebrating or crying. One or the other is going to be true. So.
Yeah.
We're joking. Please, no one do that. That's terrible.
These things can be good for waiting for like half an hour or an hour afterwards. Because people are they've not done anything during the day, or they've flattened up ahead of the number, and then when it comes out, you get the big move up and down, and then people start to put on their real positions. So sometimes you'll get the late move, particularly FOMC, where they don't do anything for the whole day, and that can be a good time to sort of do something and then hold it overnight.
Absolutely.
Yeah. Well, the latest FOMC on the NASDAQ anyway was not that straightforward. It was like, I can show you, on the 15-minute chart. This was FOMC, right? So it broke. It's not showing yet, but it broke the previous day's high. And it was messy, and then it started to, the overnight sessions start to find direction. And that's typically what happens. But it just sold off massively. Yeah. Like to before the price, what the price action was before the FOMC release. So it kind of completely took out this level, and then it bounced right back up to the day
pre-market, wasn't it? That sell-off was pre-market.
There was pre-market, yeah. This was the market open.
There was no volume behind it. That I remember not waking up, but going on the chart, seeing that, and I was like, that's a big move for pre-market. Like, and it looks like there was a lot of volume behind it, but there really wasn't. So I found that quite interesting. I can't quite figure out that. I'm assuming just a lot of people took their money out, but it doesn't really make. I don't know. Sometimes there are question marks.
Yeah, it just like.
Don't know.
Yeah, you're right. But the point is just like it really struggled to find direction.
Yeah.
But usually usually the next day after FOMC, it finds direction.
Yeah.
Right. It finds direction. This time it just didn't. It took a while longer, actually today, I would say it's definitely a bit clearer in terms of just like, this would have been, I would have expected something like this after FOMC. Didn't happen. But it doesn't matter because like even on this day, I think, Sam, you got trades here to the upside.
Yeah, that was my best trade of the week, actually. It was Friday.
Yeah.
Got a beautiful
I
trade
didn't
on
get,
the upside.
This was very frustrating for me because I had to just watch it go up because it just didn't want to come back and give me an entry. It was just bursting to the upside. Like those are really annoying, but on the way back down, I did find 2 entries. So that's just kind of how it goes. But yeah, like even this move, I know it's pre-market, but if this was like during the New York session, this will just run away from me. And the only way I'd be able to catch it is if I chase it, and that's a bad idea. And you also only know how far it's going to move after the fact.
That's true.
You only know it's going to keep moving after after it just kept moving. That's when you know it just kept moving. But as it unfolds, you don't know what's going to happen. Got no idea. Okay, apart from you can just like determine what's your bias, and you can look at this and that. But that's it. But anyway. I don't know if there are any other markets we can look at. I'm not sure if you've got anything else there, Sam, on the S&P.
I haven't looked at the S&P. Let's have a look. Okay, we're getting close to that support area, but again, I'm not expecting much to happen now. I mean, it's pretty much it's made its move of the day, and that's it. Let me just switch over to the candlestick chart so I can actually see it. Oh, no wonder I'm on 4-hour chart. That's why it looks weird. That's why I was looking at it. I was like, this doesn't look right. What's going on here? Yeah. I might as well switch on the volume again. All right. What am I doing? Present.
What am I doing? I always ask myself when I'm walking around, like, where am I? What am I doing? Not really. Okay.
So, yeah, I mean, as I originally thought, we're going to reject off that area. I mean, that area was, if I had to make a bet, it would be like, I was 90% sure we're going to see a rejection in that area. But it is a huge area at the same time. So I was kind of happy we rejected quite early onto it. And then my next area where price would potentially bounce back up again would be here. But then I'm not saying that we're going to continue going up and making new highs. We might like break the high a little bit, but ultimately I am pretty much bearish for the next couple of days, I think. But as of right now, I mean, we're just kind of in no man's land. Like, I think it will eventually get here. I mean, it almost has. And then we're going to see like a little bit of a rejection off it again. We're trading below the point of control now. Buyers are not interested in really buying, I don't think. I mean, I could probably look at the volume, and I doubt anyone is really interested in buying the market right this second. Yeah, we're getting a lot more. Well, we had
selling in there.
Yeah, a lot more selling coming in. Had a bit of buying near the point of control, and that person got severely disappointed. But a lot of selling near the bottom as well. People are actually looking at the volume. A lot of people are picking the market wrong. So I'm not entirely sure what to make of that. A lot of selling near the bottom, and then heavy buying near the top. So, but we're kind of, it looks like we're kind of more going to be in a range. So I think it's just caught a few people out, and that's pretty much it. But in terms of any big moves right now, I doubt there's any moves.
Yeah, on the NASDAQ, we are actually back above. Well, on the new futures contract, on the June contract, we are. I'll quickly show you. Yeah, we moved over to the June contract. I think it was on Friday. Yeah. So I'll just quickly show you. But there's a difference. So this is the daily on the CFDs. Okay, that's the 200 EMA, and we're basically just touching it. But if you look at the June contract, if you look at that chart, it looks slightly different than the previous month's contract, because I mean, most of the volume will take place in the current month or the current quarter's contract that you're trading. So now this is the June contract, so most of the trades will take place on this one. The charts here, or the candles here, look slightly different than the previous contract.
Well, yeah.
So because there's a massive difference in volume and so on, so they don't look exactly the same. So we've got this now closing above the 200 EMA, but I'm not exactly sure how accurate that is, because on the CFDs we're closer to just kind of touching it. So it will be interesting to see. But the one of but what you can rely on definitely is the support level. Yeah.
Right.
So it will be interesting to see if are we going to go all the way back up there, and maybe break back up above that resistance level, or is it going to reject? I don't know. I don't like to make those predictions. My crystal ball is in for calibration. I'll let you know as soon as I get it back. But from this point, I would say there's probably a little bit for me. I think it's like, I'm just neutral. I'm not really sure. I'm really not really sure. But I mean, it's not going to affect my scalping in any way, because I, focus on the 1 hour is the longest time frame really that I focus on. But what I will say is, like, when you do get a bias on the daily, that's very clear, and you can find it to line up with my scalping chart, which is the 1 hour, half an hour, and so on. If they can all line up, you can typically get bigger risk reward ratio trades. You can really kind of, but yeah, it's not always that obvious by looking just at one chart. You do need to look at multiple charts.
Yeah.
Yeah, but at the moment, we are dead. On the NASDAQ, it's you can even see on the 1 minute time frame, it's just kind of drifting sideways. And look at these candles as well on the 15 minute. It's the same on the half an hour.
It's had its move.
Yeah, exactly that. It's had its move. It's going to sleep now. Everything is just drifting off.
Yeah, but do you Howard? Do you have like a specific time where you decide to get out of your your Forex positions?
Well, as I say, literally the time exit for me would come at the end of the entry day +1 if I'm still in. So it's really a case of you get in on effectively on the breakout day, and then you hold it for the follow through for the next day. So that's really my time frame.
Sure.
I always laugh when I hear follow through.
Grow up, man.
Don't have a curry. Yeah, don't have a curry.
No, I also wait for the follow through. I do exactly the same thing. I do. The new candle needs to follow through. I'm a big fan of that. But yeah, when I day trade, if it's Forex, like after I'm going to use 8 p.m. because it's the MT4 platform time. But it can be any. What's your platform time saying right now? I don't know if you have MT4 or MT5.
No.
Do you have it?
No.
Is that not based on the broker usually? MT4, MT5.
Yeah, it depends on the broker.
Yeah. Okay, but the one that's closest to the UK time, that one. I suppose that doesn't help either. But okay, so basically for me, it's 8 p.m. where I'm at now. It's 20 past 8 where I am. Right. So at the moment,
20 past 6 here.
Okay, so an hour and 20 minutes ago, that is the latest I'll be in a Forex trade, because it really Let me put it to you like this: the last 4 hours of the New York session. So
yeah,
the close. 4 hours prior to that we know there. The last 4 hours of the New York session
yeah,
is in Forex like completely dead, apart from actually, except for I've seen some really nice moves on the yen pairs during that session. But things like the euro dollar, pound dollar, most other pairs is like it's not a good time to get in. Like if you see something like a breakout forming, it's a very low probability setup typically in that last 4 hour window.
I think you sort of you don't go much beyond the US stock market close. The time of that 10 o'clock my time, 9 o'clock UK, isn't it? You don't really want to be because you're just sitting through some choppy stuff through the night. Spread widenings and all kinds of funny goings on.
Yeah, the spread widenings are terrible. They can be worse on some pairs. But like if you are staying, have you done your kind of like your burning the midnight oil days, Howard? Have you been through those days?
I've had them. I've had them, but no. Just put.
Yeah, like with that, you stay up and you go, okay, you wait, and you're like, okay, because maybe you think or you saw like a big move the previous Asian session. It's like this is where like it's all happening. Okay, I'm staying up tonight. I'm staying up, and then
nothing happens
until like 6 a.m. in the morning. Like I'm gonna go to bed now, and then you wake up and it all happened during the London session. It's like, this is ridiculous.
Or you thought that the Bank of Japan meeting was on a particular day, but it wasn't. It was on a different day. And you're waiting. Oh, nothing's happening.
Yeah, but like what I've done like on the NASDAQ is like I'm trading during. I haven't done that for a long time, but I have done that before, and that is trading when the market or when there's a bank holiday in the US, and I have no idea there's a bank holiday.
I can top
the market sucked today.
I can top that.
It's fairly priced.
This was about like maybe, and I'm ashamed to say, probably about a year into my trading journey, logged into trade, and I was just sitting the whole day. I couldn't see a single trade. It just went sideways. Didn't find out till afterwards it was Good Friday and literally everywhere. I was questioning myself. I was like, why does it look so weird, the market today? Nothing's happening.
Very slow. Yeah, you see.
What am I, the Easter Bunny or what?
Yeah, exactly. Or like, missing news events as well. Like just not watching. Oh man, I've done all of those things. Okay,
still
this is
occasionally
beautiful.
happens.
Yeah. No, I don't make this mistake. No.
There's been a times I've been that close with like I was about to enter and I'm like, wait a second, what time is it? And I was like, oh, okay.
and then of course you get superstitious about 2:30 in the afternoon or 4 o'clock in the afternoon. You kind of you think something's going to happen. Even if there's no figures.
You got to bake these things into your routine. Like I try to just draw a horizontal line every morning. Well, every time I get on the chart, Forex Factory, look at the news, horizontal line. I never forget it then. Yeah. But sometimes you do forget, and then I've never been like badly caught out, like not in recent years, but there were times where I just stopped myself and I was like, ooh, just before I entered, let me double check. Actually, I know something's coming out, and I completely forgot. So yeah, it can still happen. You got to make it into like a routine.
Yeah, but you kind of
nature.
But you like I don't talk to myself for 2 days when I do something like that. It's like no thoughts, nothing. No, but you are like really annoyed because you think like, what the hell's wrong with me, man? Because that was really dumb. Yeah. But that's like I think everybody goes through that. And not just that, then the learning stage is it's terrible. It's a horrible thing to go through. Like,
it was only actually sorry. It was only a few years ago actually I made a horrendous error. I was playing around on MT5, right? And like whenever I want to test something, obviously use a demo account to test it, right? And like the demo account had like a ridiculous amount. I can't remember what the actual amount was, but it was like a huge amount of money. And I was like trading with like 20-30 lots on a demo account, right? And anyway, I was testing it out. I went back to my live account and I didn't look at the lot amount that I was about to enter with.
Oh man.
I just entered with like 20 lots on a trade, and like the initial drawdown was like, holy crap! Like,
Yeah, you'll be. Yeah, that's a. Yeah, I could just imagine because you like immediately when you open the trade, you're in the loss, right? Because of
Yeah.
the spread.
just the spread
if you-
itself was like an
Oh,
obscene amount of money, and I was like,
Yeah. Do you guys like? Do you guys still have those spread betting companies? Do you still have that or not? Like they had a company many years ago. I don't think they exist anymore. It was called Capital Spreads or something like that. But it's like it's spread betting, so it was tax free in the UK, specifically in the UK.
ah, right, yeah.
Yeah, spread betting. So you don't.
I've heard about
it's
spread betting, but I
Yeah, I've
genuinely
heard
have
about
no idea. Yeah,
it's tax free and all of that because it's betting. But you
gambling.
bet. Yeah, but it's still with charts and all that. But it's it's like you bet the size, like it's £2 a point or £2 a pip.
Right.
Yeah.
So what are you betting on though? Like,
I didn't know what it was like I didn't know. It was like I thought it's like how much do you want to risk or how much do you want to eat? I didn't know what I was doing. Like, yeah, I'm going to do 100. No, like you like you don't know what you're doing. Well, when you get into a trade, right, and things are just going, it's almost like your decision making becomes paralyzed. You know, it like you freeze, and the obvious thing would be to get out. Just get out, but you know, in that moment, it's like I'm down. How much? Okay, it's got to come back a little bit. Come back a little bit. I would be happy with the break even, and then it goes to a little bit of profit. Okay, a little bit more,
yeah.
and it goes back down. Oh man,
Oh, it's horrible.
no, it's horrible. But I'm always amazed when people say it takes them 2 years. I'm always amazed by that. But maybe if you have like proper training and so on. But when I started, this is way back in 2004. There was nothing. There was one course in London that I paid £2,500 for. £2,500 in 2004.
back then, that's like £1 million
that was
today.
like £1 million, man. I had to sell everything. For that course, only to find they were teaching me double tops and double bottoms. Like, really? I promise you, that's what they were teaching. Like really basic things, but there was not a lot of stuff. There was just not a lot of stuff.
But we didn't have like as algorithmic trading like we do today. Like, back in those days, it was a little bit more simpler, the market. It was really around like 2010 onwards. The whole algorithmic sort of boom happened. And I mean, like in 2010, there was that dude who crashed the whole the stock market because he was spoofing. He created his own algorithm, right, to spoof the market. And it dropped it dropped over $1 trillion. It was a flash crash in 2010. Over $1 trillion was wiped out, and it only lasted 30 minutes or so. But he essentially, I don't exactly know how he did it, but he basically spoofed the market so much, which is again illegal. He somehow triggered a flash crash. I don't know how.
Yeah, but that reminds me of the now talk about flash. Do you remember that Swiss franc move?
Yeah.
This was in, I think, 2015, 14, 15, something like that.
I was there trading it.
Were you on the right side?
No, I wasn't actually trading euro Swiss or dollar Swiss. I was actually I was in a euro dollar and a dollar yen position, and normally they would both go the way of the dollar, but they both went in completely different directions. And I made money on one, and I lost on the other. I'm thinking something strange is going on here. And then I saw what was going on with the Swiss franc, and it was just a complete the whole market.
It was. I've never seen. I remember like even talking at the time to other traders saying, "This is probably the only time we'll probably never see this again in our lifetime." It moved like thousands of pips.
Yeah,
thousands.
Wow. The only time I remember that was Brexit, when they were announcing, literally counting the votes live, and I was watching it, and then the moment it became apparent we're actually leaving the EU, it crashed, and I managed to catch like a little bit of it, not the full move, and that was like at the time the most money I ever made. And then I remember a few months later, there was like talks about a Scottish referendum, and I was all for it just because I wanted to. I wanted to see a move like that again. That was like the greatest thing ever. I was like signing petitions. I'm like, yeah, Scotland needs to be independent. Come on.
Yeah.
Yeah.
I'll vote for that.
Yeah,
wanted another move.
Yes, but I'll tell you what, like after such a big move, like especially that Swiss franc one, man, oh man, and this happened like pretty much instantaneously. It was like you just see, I mean, you can't even see the previous price action. It's like just little dots.
Yep.
It was just
It's like a bad tick.
Yeah, it was just like a little flat tick chart and this massive 2,000-3,000 pip move. You're like, whoa.
Yeah.
So a lot of brokers actually went bust on that because they are responsible for the losses that the clients can't cover. So it was just gapping. But anyway, all right, guys, it's always a pleasure.
Yes, lovely.
It was a really good session. Jannie, Howard, thanks again.
Yeah. See you all very, very soon.
Definitely.
And
have a
to
great
all the
evening,
viewers
guys.
as well. Thank you.
Oh yeah, of course.
Thanks everyone.
Thanks for
Can't
watching.
forget the viewers, Jannie.
Take care, Andre. Everybody else, Robert. Take care.
Yes, Robert.
Cheers, guys.
Cheers.
Cheers. Bye-bye. Bye.